Recording in progress.
Good morning, Alan, Butle. How many members of the committee? I see Honorable Alexander is here. Honorable Makuel, Honorable Van Rooyen, Deputy Minister Sarpe, and myself. How many are we? Are we 5?
Morning, Chair. Members of the committee currently is only 4 on the platform. It's yourself, Ms. Alexander, Mr. Van Rooyen, and Ms. Makubele.
Makuel,
Honorable Chairperson, Dr. Maswangani, I'm inside.
check us Kwati because he hasn't apologized. It's Lekhanyani
And Kalek, I'll do so. I'll do so now, Chair.
Ntate Van Rooyen, okay, Ntate Mlefe today. Honorable Van Rooyen. Can you hear me? Dr. Guman, where are the fighters? I don't see EFF, Action SA, IFP. Dr. Guman. Honorable Van Rooyen. Honorable Alexander. We got the apology of Dr. Beck. Who's the alternate?
Good morning, Chair. Currently, we don't have an official alternate, as far as I'm concerned.
Okay.
Chair, Mr. Molefe joined. So now it's 1 short.
Okay. I don't see Tambo because we got an apology of Honorable Maut. Do we have apology of Honorable Khadem from IFP?
No, we don't, Chair. I'll just try and get hold of him on the phone quickly.
Okay.
Chair, Ms. Matua joined, so it's 6 members currently on the platform.
Okay. Let's start with our meeting. Thanks, Mautwa. I thought you have apologized, but thanks for attending. We were struggling to form a quorum here. The meeting is officially open. Let me welcome all members of this committee who are in attendance. Welcome officials from National Treasury and all the entities that report to National Treasury. The purpose of today's meeting is to get the briefing from the National Treasury and entities on their strategic plans for 2025, 2030, and their APPs for 2025, 2026. It's going to be a long meeting. We are planning to finish around 15 hours, and we have got so many apologies. Be that as it may, let's go to the item on apologies. Alan?
Thank you, Chair. Apologies from the committee is Mr. Lekhanyane, Dr. Burke, Ms. Matwe, but she's since joined. Ms. Kalika Mazibuko, she is attending appropriations. And then Mr. Beasley will join a bit later. From the department is the Minister of Finance and then Deputy Minister Dr. Masondo. Thanks, Chair.
Thank you, Alan. Those are the apologies that we have received. Then let's move to item 2 on the overview by the Minister of Finance. Deputy Minister Sarpen, over to you.
Good morning, Chairperson. Thank you very much. Let me start by firstly tendering the apology of the Minister of Finance. I had us chatting this morning. He is quite ill today, and so he sent me in his place. Chairperson and members of the committee, before I hand over to the National Treasury colleagues to present the 2025 and 2030 strategic plan and the priorities and outcomes set out in the annual performance plan, please allow me to reflect on the interventions planned by the departments in the period ahead. Firstly, on our fiscal outlook and strategy, South Africa is benefiting from more stable power supply, but structural constraints continue to limit growth, and our downside risks have broadened. The global outlook has also deteriorated in the face of greater policy volatility. Global inflation, however, does continue to ease, albeit with pauses in interest rate cuts by many central banks. Within this global context, economic policy remains firmly focused on supporting growth, boosting employment, and building the country's resilience to shocks. Government's balanced fiscal strategy remains on track, and debt as a percentage of GDP will stabilize this year. Over the rest of the decade, our primary budget surpluses will grow sufficiently large to lower the debt to GDP ratio. The key elements of our strategy are firstly stabilizing public finances, secondly reducing risks to the fiscal framework, thirdly encouraging economic growth and supporting low-income households. And in the context of weaker than anticipated global and domestic economic growth, additional revenue and expenditure measures are required to stabilize our public finances. Chairperson, Section 216 of the Constitution of our country and the Public Finance Management Act clearly spells out the role of National Treasury. The 2025 to 2030 strategic plan and the 2025/6 annual performance plan that you are considering here today are in support of these constitutional and legal responsibilities. The National Treasury has set itself a 4-pillared strategy. The first is to achieve sustainable public finances. The second is to ensure sound financial control and management of public finances across the public sector. The third is to advocate for coherent economic policy. And the fourth is to achieve increased public infrastructure investments. So our strategic plan and our annual performance plan articulate our commitments that we are making over the medium term in realizing this mandate, to which yourselves as the committee must of course hold us to account very strongly. So Chair, if you'll allow me please to hand over to the Director General's team and the National Treasury colleagues to outline these interventions in more detail. Thank you very much.
Thank you. You can invite the DG to proceed from where you have left.
Thank you very much. The National Treasury colleagues please now come in.
Thank you, Deputy Minister Sarpen. Good morning to the Honourable Chairperson and Honourable Committee members. And really thank you for giving the Department an opportunity to present our 2025-2030 strategic plan and 2025-2026 annual performance plan. My name is Shabir Khan. I'm standing in this morning for the Director General, Dr. Duncan Peterson. I'm also accompanied this morning by some DDGs who are online, our finance colleagues, our parliamentary support team, and Ms. Laura Msime. Our National Treasury's annual performance plan, Chairperson, for the 25-26 financial year will guide the department's activities in realizing the commitments made in the department's strategic plan. In presenting this plan as the first under the 7th administration, it is evident that this term will raise unique challenges. It will also present new opportunities to show great innovation and resilience as we chart this new political landscape and navigate intensifying global ambiguity and contestation. The urgency to address pervasive poverty, unemployment, and increasing inequality has added impetus to the work that National Treasury must do to support accelerated economic growth. This will require that our collective efforts are harnessed towards unlocking the productive capacity of the economy, address structural constraints, ensuring macroeconomic stability supported by sound fiscal policy and implemented by a capable state. As we move on to slide 2 of the presentation, the National Treasury distinctively draws its establishment and mandate from Chapter 13 of the Constitution, with its functions further articulated in Chapter 2 of the Public Finance Management Act and Chapter 5 of the Municipal Finance Management Act. The department has wide-spanning distinctive obligations that provide strategic services to the whole of government in providing public service delivery. This ranges from coordinating intergovernmental financial and fiscal relations, promoting national government's fiscal policy and the coordination of its macroeconomic policy, managing the budget preparation process, enforce transparency and effective management of revenue and expenditure, assets and liabilities, public entities and constitutional institutions. And lastly, ensuring the stability and soundness of the financial systems and financial services. This strategic plan introduces new focus areas to augment the work that National Treasury has effectively performed. This is in line with the department's commitment to constantly adapt to national imperatives and contributing our efforts to forging a common purpose in the interest of growth and development. In this way, the department will deliver on three of the medium-term development plan strategic priorities to address the country's pressing challenges by driving inclusive economic growth, reducing poverty, tackling the high cost of living, and building a capable and ethical state. As we move on to slide 3, the National Treasury has a strong foundation that will enable the department to meet our constitutional mandate, mitigate external shocks, and deliver on its obligations in terms of the medium-term development plan. National Treasury has been preparing the institution to implement the new strategic plan and annual performance plan, having amended the functional organogram and in the process of aligning the budget program structure. The department is committed to maintaining a culture of performance excellence, cooperation, and development. As custodians of the national financial resources, our values of integrity, professionalism, accountability, consultation, and transparency position the department in good stead to safeguard the trust placed in us by the public. To support the delivery of the strategic plan, the department will continue to strengthen our organizational capabilities with emphasis on the 3 pillars of people, process, and technology. Key to all these endeavors is the National Treasury team, whose dedication, commitment, and professionalism enables consistent service delivery excellence. At this time, Honorable Chairperson, I will hand over to Ms. Laura Msime, Head from the Office of the Director General and Chief Director, Strategic Planning and Oversight, to present the department's 2025-2030 strategic plan and 2025-2026 annual performance plan. Thank you, Chair.
Good morning, Chair. Good morning, committee members. Thank you very much, Acting DG, and good morning, Deputy Minister. Just to focus on the work that National Treasury has done in order to ensure that our structure supports our shifting and evolving strategic objectives. We have spent the last 3 years reviewing our structure in order to prepare the Treasury for the new SP and APP for the 7th administration. In that regard, we will be presenting during the course of this year amendments to our structure. Firstly, in respect of Program 7, the revenue administration will now be a transfer only. The SLA that was previously tracked through our APP will now be tracked in terms of Program 1. Equally, we will be presenting a consolidation of Program 6 and Program 4, Program 6, and the economic policy and international financial relations into a new program, which will be economic policy and international cooperation. We believe by bringing these two divisions together that we will better articulate our economic policy into international fora. The Treasury's planning ecosystem, just as a context and location for the presentation, is maturing, it's complex, it's integrated both vertically and horizontally. Similar to all other departments, Treasury reports now into the NTDP. We have outcomes in priority area 1, 2, and 3, and we've ensured that the golden thread of planning is evident as we articulate the outcomes of the NTDP in our strategic plan and our annual performance plan. We will be presenting our strategic plan and our annual performance plan. The committee will note that we've had a significant engagement on our SP, and for the first time ever, we did external stakeholder surveying to inform the repositioning in certain areas, as well as the focal areas that Treasury has now identified for the next 5 years. Our annual performance plan articulates our strategic plan. We have divisional operational plans, and Treasury has an additional layer of planning, which is our Chief Directorate's operational plans. This lists and monitors all of the work that each Chief Directorate does, and in that way we ensure that the objectives and outcomes of the strategic plan and the annual performance plan find their articulation in the actual work that Chief Directorates do. It also assists in our performance reviews of individual Chief Directors and the DDGs, and their performance scoring is directly linked to the scoring of the performance on the Chief Directorate operational planning. The committee will note that in our reviewing and in preparation for the complexity, the opportunities, and the challenges that will arise in the 7th administration, and National Treasury has spent a considerable period reviewing our vision, mission, and values, as well as our impact statement. This is in order to ensure that the far-reaching and wide-ranging work that National Treasury does is sufficiently targeted and honed onto those outcomes that are most impactful. We've reshaped our vision from our previous 5-year period, and it articulates our vision for South Africa being inclusive economic growth, sustainable fiscus, accountable public financial management that will improve the standard of living for all South Africans. Our mission emphasizes our responsibility as the custodian of the nation's financial resources. We oversee the management of public finances. We maintain the stability of the macroeconomic and financial sectors and ensure the effective financial regulation of the economy. We aspire to excellence in the quality of our analysis, professionalism, and advice and innovation in execution. We have maintained our values as we believe that they stand the Treasury in good stead to be able to deliver our services with integrity, professionalism, to be accountable, to encourage and require ourselves to consult and to be transparent. Most importantly, we have really focused our impact statement to sustainable public finances that contribute to inclusive economic growth. The committee will note that there are 3 key themes in our strategic plan that directly deliver on our impact statement. And you will see that the first is growth. And we articulate clearly Treasury's contribution to growth, sustainability in local government in particular, but sustainability of our fiscal position, and finally, resilience. And you'll see much work is going to be done in our addressing our learnings out of the recent shocks and weather shocks in particular that South Africa has experienced. In terms of our strategic plan, our targets, our first outcome is sustainable public finance. And in terms of the indicators, our first indicator is to enhance fiscal forecasting and budgeting, and there we've got 2 targets: to maintain our annual primary budget surplus and ensure compensation at 30% or less of consolidated expenditure. We have learned out of our recent shocks, and we are focusing on ensuring we strengthen the capability for financing disaster risk. You'll see that throughout our strategic plan, we have that thread of addressing risks and ensuring sustainability. Here, we are going to ensure that we have a national disaster risk financing policy developed, as well as the grant frameworks amended to integrate disaster risk management. We are strengthening the budget process. This has been referred to significantly over the last recent past. And part of that strengthening of the budget process, but not only limited to, we're going to ensure that climate change budget tagging framework is developed, as well as our gender responsive budgeting guidelines are reviewed. Sustainability of provincial and local government budgets is a key theme for National Treasury, and it finds its expression across a number of the work areas that Treasury is responsible for in terms of our obligations. We will support provinces with practices and tools to manage budgets, and we're going to support local government with financial management practices and tools to strengthen compliance with the municipal budget process. We're going to enable the intergovernmental fiscal framework to promote financial sustainability. Here, we're talking about both the provincial and local government equity share formulas to be reviewed, and for local government, the fiscal framework to be reviewed. The committee will know that that work has already commenced. We are strengthening South Africa's system of anti-money laundering and combating the financing of terrorism. And we are going to ensure that South Africa is removed from the FATF grey list by 2026. And we issued a press release recently, as did FATF, on the latest assessment of South Africa's actions. In terms of our second outcome, coherent economic policy advocated, growth and development measures, as I indicated, growth is a central tenet of the strategic plan. We're going to have a national strategy on financial inclusion developed to improve access to financial services, as well as the continuous assessment of the introduction of VAT-exempt food items to support low-income households. This is part of the budget process and will be done annually as we do that. We're going to advocate for South Africa's financial, economic, and developmental interests internationally and globally and really we're focusing on chairing the G20 track. Our third outcome is to ensure sound financial controls and management of public finances. Here we're looking at reviewing legislative frameworks to enhance the effectiveness and efficiency of public financial management. And there we are focusing on the long-awaited amendments to the PFMA and the amendments to the MFMA, both of which we intend to bring to Cabinet by 2027. We are focusing on capacity development and leadership. There's been significant work done internally within Treasury to review the support measures that we are providing to province and local government in order to ensure that they are impactful, that they are efficient, that we're receiving value for money, and that they are making a step change in those particular municipalities that are in crisis. The outcomes of that review will be completed within the next 2 to 3 months, and that will inform our agenda in respect of the support mechanisms that we provide going forward. In particular, we are looking to professionalise the SCM work area, and a framework will be developed by 2028, as well as local government capability development model developed. We are shifting our focus away from providing training programs to assessing the capabilities of a municipality and assisting to strengthen those. And in this way, we are wanting to reduce the risk of the training being given to an individual who then leaves the municipality, or that the municipality, despite receiving training, remains dependent on the support that we provide. And not developing an internal capability. So that's going to be our focus. Our third outcome is sound financial controls and management of public finance, which continues with the public procurement that drives growth. This is an important shift for Treasury. We are now clearly tracking the contribution that public procurement has to economic growth. And here we're looking to implement the strategic procurement framework, as well as the implementation of the recommendations that arose out of the recent MAPS review that was done on our SCM government-wide systems. We're going to modernize and automate the financial management systems. Here we're ensuring functionality of the transversal financial management system, automate the procurement system, ensure that we have a data exchange platform implemented, and the end-to-end G2P system expanded to at least 2 governmental entities. And in order to improve financial discipline, we're going to establish the financial misconduct investigation committees for both the PFMA and MFMA institutions, as well as the legal instrument for the appointment of an administrator for public entities in financial distress, in order for us to have a model and a framework to refer to when we need to rapidly respond to areas of distress. In terms of increased public infrastructure investment has been an ongoing focal area for Treasury. We're continuing that work, and in that regard, we're supporting public financial infrastructure investment. And that's our targets there are performance-based incentive for reform and investment in metro trading services implemented in the 8 metros. Infrastructure reporting is strengthening reporting. You will see in our APP as well is a theme throughout Treasury's work. We are strengthening it through our modernization and automation, and we are strengthening it in terms of requirements. And 80% of capital investment directed to urban integration zones. In terms of our APP, we have provided with the plan updates to institutional policies and strategies for the period. Certainly is going to be a busy period where a number of these institutional policies need to be updated. In terms of Program 1, this is our administrative program. As part of our restructuring, we are establishing a new division that will form within Program 1, and that is the Office of the General Counsel. It will be responsible for the legal and legislation, as well as for the policy frameworks that govern entities. ICT is a critical support measure for National Treasury, and to this end, we will be monitoring its efficiencies, recognizing that we are reliant on CETA, but there are efficiencies within Treasury that we need to monitor in order to ensure that our support mechanism is at its most efficient. We will continue to monitor the performance information and for usefulness and reliability. We will continue to ensure we have good governance and sound control environments in terms of our business continuity management. Given the functions of Treasury, it's imperative that we do not have downtime in a number of our obligations. We will advance organizational optimization in our management and leadership development programs. In particular, we have established a program in partnership with Stellenbosch universities that recognizes that as Treasury employees are promoted from purely technical positions into managerial positions, that we need to provide them with the right managerial competencies. And this program does provide that, as well as a specific program for women managers in Treasury, as well as negotiations. We also ensure the mainstreaming of women, youth, and persons with disabilities in terms of our action plan, and will be specifically monitoring that work. For economic policy, tax, financial regulation, and research, remembering that this APP was completed prior to the approval of our restructuring, so economic policy remains as a discrete division, as well as IREP, but we will be making those amendments. Here we're continuing to focus on our research papers. They're a critical part of the work that we do. We also have our financial sector legislation, as well as our tax legislation. We will be monitoring the implementation of the FATF action plan, as well as the critical work that's done in respect of economic forecasts that we will continue to aid policy making. We also will be producing relevant macro and microeconomic policy analysis and those reports that promote macroeconomic stability, poverty alleviation, retirement reform, social security, and the development of inclusive growth and job creation. Those will be the priorities of our research for this year. For Program 3, which includes public finance, it includes the Budget Office as well as RGR. Our focal areas is to maintain primary budget surplus, to publish our National Disaster Risk Financing Strategy, to amend the grant frameworks to integrate the disaster risk management, to continue to revise our public-private partnership regulations that will be gazetted. This is work that's ongoing. The poverty and education components of the provincial equitable share formula will be updated. Phase 1 of the review of the local government fiscal framework will be completed in this year. We will produce a progress report on the implementation of the township economic development strategies, and 100% of the infrastructure plans assessment reports will be reviewed. We will continue with our catalytic projects that are prioritized for implementation. We will conduct research on financial affordability of the social security system, and that includes all aspects of the social security system, including labor activation. 100% of requests to prepare mandatory financial recovery plans will be responded to within 90 days. Just to the committee, we have further honed this indicator so that we are measuring the work that Treasury does, recognizing that this work has inputs that are reliant specifically in local government, but we will be measuring Treasury's efficiencies in this particular indicator. We are now tracking the functional budget group reports that are produced. This is important work, and it's as part of our emphasis on efficient and useful reporting, as well as we will be tracking the expenditure reports submitted to the Standing Committee on Appropriations. Program 4, Assets and Liability Management. We will continue the reviewing of our corporate plans received from Schedule 2 and 3B public entities, as well as their annual reports. We will be reviewing 100% of complete guarantee applications received, as well as our annual gross borrowing requirements met. In Program 5, this is our financial systems and supply chain management systems. We will be developing our norms and standards. We'll be submitting the PFMA and MFMA amendments to our minister. We will produce a report on the public finance management support initiatives. As I indicated, these are currently under review. We will draft the SCM professionalization framework, which is part of the outcomes in our strategic plan. We will develop a functionality to track invoices and payments made by government departments within 30 days. So this is the work that they do for whole of government, not just for National Treasury. And this is in support of the Deputy President's initiative on ensuring that government departments pay SMMEs in particular in terms of rapid payment schedules. We will implement automated processes for handling requests for quotations as part of our strategic plan on modernization and automation. We will implement 14 transversal term contracts, as well as the regulations to the new Public Procurement Act to be promulgated. We aiming for October for that work to be done. Program 6, as I indicated, is currently standing separate, but will be integrated together with economic policy into the new division, which is economic policy and international cooperation. We will continue to ensure 100% responses to all economic and surveillance reports. G20 finance track is a critical imperative for our work for the year, as well as producing our 3 analysis reports on the outcome of South Africa's engagements in regional and global forums. This is an important indicator that shows in this 7th administration, Treasury's shifting from action-based indicators to impact-based indicators, where we no longer track whether you've attended a meeting, but in fact we're going to track the impact you've had on the engagements of our position and the outcome of those engagements in the regional and global forums notices. In terms of human capital, our demographics, we are achieving our targets in terms of demographics, as well as we are overachieving in terms of our gender targets. What we're not yet achieving is our disability representative targets. Whilst we have increased, we were below 1% for several years. We've now increased to 1%. We're not yet achieving our targets. And so we have now translated this target into a target for each division in their CDOPs, in their divisional operational plans, in order to address this underperformance in terms of disability. We also work with disability agencies and NGOs in order to encourage persons with disabilities to apply for positions when Treasury advertises. In terms of our age analysis of our 1,031 employees, our largest cohort is in the age of 40 to 44, but it's important to note that a significant majority of Treasury's employees are defined as younger, whilst we have significantly fewer employees in the 55 to 59 year age bracket. In terms of training, training is a very important component of Treasury. In order for us to be able to provide the advice, the expertise, to be professional, we have to continuously ensure that our capabilities and our technical competencies are strengthened. To this end, 267 employees attended training programs, and 102 employees attended coaching programs during the previous financial year. Bursaries and internships, 56% of bursary recipients were females, and in terms of our internships, 55% of our interns were females. Equally, we ensure that our gender and our demographic targets are represented in our bursary beneficiaries as well as our internships. It's important to note that Treasury does grow our own timber. Our interns come through our programs. A significant number of our chief directors did start off their careers in Treasury as interns. And just to for the committee to know that we've recently appointed 3 new DDGs, DDG Tax and Financial Sector Policy, DDG Public Finance, and DDG Intergovernmental Relations, all 3 of whom have had a long and a prestigious career in National Treasury. At this point, DDG, I'd like to hand over to Unati, who's our Chief Financial Officer, to take the committee through the finance components of our presentation. Thank you.
If I may, Chair, through you, and good morning to you and the honourable members. Thank you, Laura. So in this part of the presentation, these are the last 3 slides. This is basically setting out the financial resources that are planned for 2025-26, the current financial year, up to 2028-29. And this is really the budget that enables all of the APPs and plans that Laura has already outlined. What I would just like to draw the members' attention to is that in terms of what we are presenting in these various columns, these first 2, you'll see it's our budget for the year that has just closed, 2024-25, and we compare our outcomes to our unaudited figures. We currently are in the audit process, but in terms of that expenditure, it amounts to 33.1 billion. That's basically 99% of our expenditure achieved. The unspent funds amounting to just over 200 million have been declared back to the fiscus. And then if you look at that third column, which is our 2025-26 main budget, you will see what Laura was referring to in terms of what was named Program 7, that's civil and military pensions. That line from the 2025-26 financial year moving forward, we have zeros there, and that's, you know, this shift in terms of the programs. It'll no longer be under vote 8, it'll be a direct charge, and we will still, however, be overseeing it in terms of its performance, although it won't be on our vote directly. So that's just the major change to note in terms of the 33.3 billion of our final budget for 24-25, and then coming into this year, that reduction of 27.9 billion is mainly attributed to that change in terms of these programs. So that's just the main thing to note on this slide. And then if we go to the next one, it's basically just a graphical presentation of the same information. And you see that significant drop due to this reclassification of that particular program. That drop between the year that we have just closed and then going into the current financial year. And then on the next slide, if we just check in terms of our economic classifications, transfers, obviously still taking the largest piece of this pie, transfers and subsidies. Again, that's really the main in terms of our numbers, that's where our main budget is expended. And followed by that, the next distant second would be goods and services, compensation of employees, and then some payments to financial assets. And that's, just really a test to, in relative to what we are able to do and deliver in terms of services. From the National Treasury perspective, there is a lot of value for money to be referred to there. So that is the financial piece. And I can stop here because the next one is just is the very last one. Thank you. That is it from me. Thank you.
Thank you, Najik. Chairperson, this concludes the presentation from the department. Thank you.
Thank you, National Treasurer. Honorable members, I suggest that instead of taking questions and comments now, we take the next 3 presentations: the Accounting Standard Board, the FAIS Ombud, and the Ombud Council. I say this because we are getting depleted. As you have heard, Honorable Mauta is going to the doctor. Honorable Makuele at some stage will be boarding the flight. And so while we're still quite a sizable number, I would like that we take the next 3 presentations so that there can be a maximum participation. Agreed?
Agreed, Chairperson. We do agree to this proposal.
Okay, thanks. Let's invite the Accounting Standards Board, ASB. So you have got, is it 20 minutes? Please do timing on your side.
Don't know if you're able to both see me and hear me.
Yes, we can see you.
Perfect. Are you able to see my presentation?
No.
Not yet. All right. All right. I think you should be able to see it now.
Yes, we can go ahead and present. 20 minutes.
Good morning. Good morning, Chairperson and honorable members and to other colleagues from the Treasury and elsewhere on the call. I'm going to give you a very brief overview of our strategy and annual performance plan for 2025-2026. So I'll just give you a brief overview about what it is that we do and then run into the key business of today. So as a snapshot of what we do, I want to explain 2 things to you. Firstly, who we are as the ASB, but then how we position ourselves in the larger PFM ecosystem. So starting off with us and our purpose, we are, of course, a Schedule 3A public entity. You would know already that our executive authority is the Minister of Finance. That's why we are here. Our mandate is described in the Public Finance Management Act. We don't have separate legislation governing us, but because of our importance in terms of accountability and stable finances, we are located within the PFMA. What we do, we issue accounting standards, which we call standards of GRAP. And our mandate is to issue accounting standards for all government entities. So this includes public entities, state-owned entities. Some of them don't apply our standards. We let them apply IFRS, but we are primarily accountable to determine what they should report. So public entities, SOEs, municipalities, municipal entities, parliament, legislatures, as well as the departments, ones that say how you should prepare your financial statements. In terms of the standards that we issue, they are principle-based and they are used in preparing the financial statements, the annual report template, and the principles are prescribed by the National Treasury. So we are one piece of the puzzle, so to speak, and I'll talk about this a little bit later as well. What I want to emphasize is that the standards are principle-based, they're not rule-based. So accounting is by design a social science, which means that we apply judgment when we prepare the financial statements. And judgment is one of the key things that makes applying accounting standards and accounting both interesting and complex. It means that we need highly skilled people to make these judgments so that the users of the financial statements can indeed understand what the financial position, financial performance, cash flows, etc. are of a particular entity. The principles and the standards are really designed to ensure that there's transparency in how revenue, expenses, assets, and liabilities are reported. You would have heard the Accountant General use these terms in his earlier presentation. But what really does the transparency help us to do? It's really to make sure that we have improved decision-making based on the information in the financial statements, and that officials can be held accountable. And the types of decisions that we are looking at would really be economic, as well as financial decisions, and help inform certain policy decisions. Ultimately, our goal is to make sure that we build a capable state and strengthen the country's democratic processes. So for us, success really looks like you would go and read the financial statements before you go and vote, either in the national, provincial, or local government elections. Or if you want to participate in government's other processes, so for example, public participation in strategic plans, in the budgetary process, you would really understand the financial statements located within the broader ecosystem and really use that information to go and vote. And of course, make sure that you are able to improve the lives of yourselves and your fellow citizens. If we have a look at what our role in the government ecosystem is, and this is the wheel all the way on the right-hand side, I want to emphasize a couple of verbs. So firstly, it's the ASB who determines, and we determine the principles in the accounting standards that should be used to prepare the financial statements. The National Treasury supports the implementation of the principles in the standard, particularly through the Office of the Accountant General. The Auditor General assesses whether the principles in the standards are being applied appropriately and achieve fair presentation. And then lastly, we have Parliament, legislatures, municipal councils exercising oversight over the audited financial statements to ensure that strategic plans and budgets have been adhered to. If we have a look particularly at our planning process, we have the strategy for 2026-2030. This has been informed by the National Development Plan and particularly the priority to develop a capable state. Our APP for 2025-26 outlines our targets for the year. As we set accounting standards, the main driver of our work is really to set accounting standards for technical accounting and reporting, and this is driven by a work program. Importantly, our work program, it's a 3-year work program just because it gives us certainty as to what our resourcing is going to be over the MTF period. But our work program is consulted on with stakeholders to ensure that what we are doing is both relevant and credible for the sector. So if there are new financing mechanisms, transactions that are emerging in the economy, I think I heard a couple today, that we would really be responding to how those things should be accounted and reported in the financial statements. So our work program is really a key driver of what we include in our APP, and that is fully consulted on with all relevant stakeholders across the economy. If I have a look for then moving on to our strategy for 2026 to 2030, let me start off by saying, our mandate doesn't change. from one year to the next, particularly because it is outlined in the PFMA that we develop standards of GRAP for all entities in the government sector with the aim of helping transparency in revenue, expenses, assets and liabilities and how those are reported. But what we have done is really had a good think about what our purpose is and the impact that we want to make within the sector. So if I start off with our vision, which is linked to building a capable state, our vision is been elevated to reflect our role in the broader public financial management ecosystem, which is to prepare reports and financial statements that are just one piece of this accountability and planning cycle. So we have the strategic plan, the annual plan, the budget, the financial statements. We have the budget execution, the non-financial indicators, our service performance indicators that get reported, and then of course the audit, and then all the decisions that happen after that. But it's important that the financial statements provide a clear line of sight across all of the planning processes so that people can understand what was planned, what was done, and how that translates into money being spent in the financial statements. In terms of our mission, we've changed our focus and really tried to elevate it to what success means to us, what we do and what success would mean. So for that, it means that we develop robust financial reporting standards that can be implemented by government, and that the users of the financial reports can hold government accountable and make financial policy and economic decisions. If I move on to our outputs, I'm going to reflect on what our key outputs are in our strategic plan. We have applied the theory of change to develop our new strategy, which means that we are focusing on what our impact is and then cascading this down into our outputs and our targets. While our mandate has remained the same, there are things that we plan to do that are somewhat different to what we've done in the last 5 years. And particularly this is our desire to contribute more meaningfully to building a capable state. And this really means that we have to push the boundaries a little of what our mandate is in terms of legislation. So a key input into the development of our strategic plan was doing an evaluation of our strategic plan for the last period, so ending 2025. A key component of this work was really consulting with ASB's stakeholders on whether or not we achieved what we thought what we wanted to do over the last 5 years, and really what the impact was. So are we really making a difference in terms of transparent reporting? Are we really ensuring that officials can be held accountable through the financial statements? And then, of course, having a look at whether or not people are actually able to engage with the financial statements and preparers can indeed apply the standards that we issue. So by and large, our findings were positive from this work, except that there's a lack of understanding about the role of the financial statements, how the financial statements can be used to hold officials accountable, and then what decisions can be taken based on the financial statements. So this has resulted in us including a new output, a new set of indicators to promote a culture of learning with preparers and users of the financial statements. The other thing that we heard from this impact assessment was that stakeholders require more tools, more guidance, more training. These things are not necessarily within the ASB's mandate, but this is where we collaborate with the Office of the Accountant General and other colleagues and units in the National Treasury. We do know that stakeholders often do not know where to locate or do not know about the existence of several resources that we make available both as the ASB and the Office of the Accountant General. And this is really going to be a key sort of activity of ours going forward, is to make sure that all the resources that we have are available in a single place. We've already, through the Knowledge Hub, which is a joint initiative with ourselves and the Office of the Accountant General, launched this hub to be sort of a one-stop shop for everything related to how to prepare your financial statements in government from a GRAP perspective and then from a modified cash perspective, which is the framework issued by the National Treasury. We will, of course, be undertaking more work to expand what is included on the Knowledge Hub over the next couple of years. But I think this is a really good stake in the ground, and we've started it last year, and it will flow through into the next 5 years. In terms of our other outputs, if I start off with just the first one, maintaining and enhancing the existing standards and developing new standards where gaps are identified. This is the core of our work. This is where we really develop new standards of GRAP if required. If there are new sort of emerging issues that are coming through the sector. The other part is really having a look at what we have already and seeing if there are improvements and enhancements that are needed based on the time sort of that has been elapsed, as well as the feedback that we receive from both users and preparers about whether or not the standards are indeed having the desired effect. The second part is having a look at influencing and collaborating with key stakeholders in the financial management system, both nationally and internationally. This is also a key objective for us, particularly from an international perspective. There is a body internationally called the International Public Sector Accounting Standards Board. They issue standards that are a global baseline for accrual accounting globally. We use those standards as a basis when we develop standards of GRAP, of course, where that's consistent with what we see happening in the local environment and where this is consistent with our mandate. But we spend a lot of time, one of our board members as well as one of our staff members are represented on this board ever since its establishment, actually, so the last 30 years. But it is critical that we maintain this influence in the international space, just so that our voice is heard both from a developing economy perspective, but also giving Africa a voice on the global stage. Thirdly is to promote a culture of learning with preparers and users. I have touched on this. This is new for us. And this is where we need to make sure that our standards are used and that the information is usable from the financial statements. So we're going to focus on preparers of the financial statements. So these are our CFOs, senior government officials in the finance function, and some other disciplines as well. Getting them to understand better what the standards of GRAP are about and how to come up with a more credible, consistent way of applying the standards. And then from a user perspective, so users of the financial statements, really getting to understand what the financial statements are about and what are the kinds of decisions that can be taken and how you can link those really across, as I said, the broader sort of accountability puzzle. So how would I link, for example, the financial statements to the budget, to the planning documents, etc.? The last one is to raise the profile of the ASB. I think I did indicate that when we did this impact assessment to see what really people understood about our work, they didn't know much about us to start off with. And our work obviously then was really secondary. If you don't know what the ASB is about, you're not going to know a lot about what we do. So we are going to spend some time over the next strategic period just really trying to elevate who we are and what we do within the sector. If I move on to our resources, firstly, let me start off with our people. We only have 7 employees and we're all ladies. So we call ourselves the A team. There are 5 professionally qualified staff, either being CAs or having another professional designation. We have another that is working towards becoming a professional from a finance perspective. She's studying towards her AAT qualification. So highly skilled, highly specialized individuals that work for us and have a specialist knowledge of financial reporting as well as standard setting. So really unique individuals in terms of their skills and competencies. The one thing that you don't see on my slide, but I would like to talk to, is the board. The ASB has separate regulations that govern the board and the board's operations. So in the regulations, it allows for a maximum of 10 board members. And this includes 2 ex officio members, one from being the Accountant General and the other a representative of the Auditor General of South Africa. The other 8 members are non-executive independent members with expertise in public finances. They either have specialist accounting and reporting skills from academia or from other interested parties. The board members are remunerated, of course. If they serve in the public sector, they are not. So we do try and leverage that as far as possible. So probably half the members are remunerated and half are not. In terms of our monetary resources, just a brief snapshot. When you see the numbers at the bottom, that's 15.4 million, 16.1 million, and 16.9 million. So not a big budget. 70% of that, I would say, is for staff costs. And that's really because we operate as a developer and sort of we develop specialist skills, we develop the documents that we issue, we don't outsource it to anyone. We are the experts in developing standards of GRAP and of course how they should be sort of supported through their implementation and application. So we are doing all the work. We don't really rely on contractors unless there are skills that we do not have that we may need to co-opt in. The other thing that I wanted to mention in terms of our resources is that we operate completely virtually. We don't have offices. If we do require offices, we do share those with the National Treasury. And there are other resources that we share with them, particularly Audit Committee and internal audit. If I move on to our sort of risk factors and challenges, let me start firstly with the one that deals with standards that are not being implemented. So as a standard setter, it's really important that our standards are applied. If we issue standards and they're not applied, we are not being effective and we are, of course, not having any impact then. So let me start off with delays in approving the effective dates of standards. So the standards are required by the PFMA. I have mentioned that. And what this really means is that somebody needs to make these standards effective and give them an implementation date, which means that the Minister of Finance is responsible for approving the effective dates of the standards of GRAP so that they can become secondary legislation. They need to be enacted for them to be applied. We have found that this process can take a period of time. So we are working with the Office of the Accountant General to see how we can streamline this process so that, of course, users are able, or preparers are at least able to implement the latest versions of the standards so that users in our environment have the most recent, most relevant information in the financial statements and really make sure that the decisions that they need to take are taken based on the latest sets of information or principles, at least when it comes to financial reporting, and that officials can be, of course, held accountable. So in terms of the implementation, the one part is potential delays in approving the effective dates of the standards. The second part is that not all entities apply standards of GRAP. And when I listed initially what our mandate is, I listed off, most entities in the public sector. The one set of entities that don't apply our standards at the moment are the national and provincial departments. And this is primarily because it would require a shift from the modified cash basis of accounting to accrual accounting. And this is something that we are, of course, promoting with the Accountant General as well as National Treasury colleagues to see how it is that the national provincial departments could move to accrual accounting, which really means that there would be a more robust set of financial statements in terms of assets, liabilities, revenues, and expenses that are provided to the public to use. In terms of our resourcing, we do have an expanding scope in terms of financial reporting. So in terms of what's happening internationally, there is a focus on sustainability reporting. I'm sure you would have heard this term going forward, which really includes climate, biodiversity, and other things listed on the UN SDGs. So we are trying to balance at the moment the 7 staff members that we do have, only 4 of them do technical work, to really see how we can balance our financial statement agenda with trying to deal with some of what happens in the sustainability reporting arena as well. It does mean that we do actually need an additional staff member, both to deal with ESG and sustainability, climate, etc., but then also for some of the other support programs that we have. In terms of our mandate, though, at the moment, it's still squarely focused on financial statements and to advancing financial reporting. That's what the PFMA requires us to do. But there will potentially be changes in the PFMA when they are tabled that might increase or expand the scope of what we are required to do. And then, of course, we will need to consider both whether or not the board is fit for purpose in terms of skills, competencies, etc., but then also having additional staff to deal with those things. There are international sustainability reporting standards that are being deliberated by the International Public Sector Accounting Standards Board at the moment. So this is not something that's 10 years away. I would say it's 2 to 3 years away in terms of having an international baseline for the public sector. And then, of course, we'll have to see how we address these things from a local perspective. And I did hear the National Treasury talk about budget tagging. So there is already an acknowledgement that these are the kinds of things that we will need to start reporting on, not in the financial statements, but in reports that accompany the financial statements. And having the right information means already having it available from a budget perspective so that it can flow through to the financial statements. The other thing that I want to just mention in terms of particular risk factors is I did say that in terms of our impact assessment that was done, we need to have the financial statements being used. And what this really means is that for us to be effective, we need to spend more effort on users of the financial statements, how they engage with that information, and then as well from a preparer perspective, making sure that there's more consistent and more relevant application of the standards. Particularly from an education perspective, we would like to focus on developing material that users will be able to access. It will be easy to use. It will explain what the financial statements are in simple terms. It will explain simply what you can do with the financial statements. So if you're looking at particular line items, what they mean, how they can translate into particular decisions, and then how you can use it in the broader process when it comes to, if you want to comment on the budget, financial, non-financial information, etc. It does mean that we need specialist skills to do this. Accountants are numbers people, they are not words people. So we really need good communicators to help us with getting the message across to users of the financial statements. And this would probably be an area where we would require additional expertise. I have added in two slides to show you what we're going to do for 2025, 2026. I'm not going to go through the detail. I think what I really want to highlight is firstly that we will be working on a standard to report on social benefits. Social benefits are broadly described as cash transfers that are paid to individuals. So these are all the grants that you would find, which do, of course, contribute a large proportion of government spending, but also liabilities. It would also include benefits like the UIF compensation fund, etc. That standard should be finished towards the end of this financial year, but really important piece of work in terms of making sure that there is a consistent way of reporting government's liabilities for social benefits and then understanding what the expenses are. The other thing that I just wanted to focus on is these 4 line items where we're going to really, again, focus on making sure that both preparers and users of the financial statements know what the financial statements are about, as well as the standards of GRAP, and then supporting the implementation of the standards. I think standard setters are often criticized for saying, well, you issue the standards, but you don't do a lot to support us. So we are not able really to be both the referee and the player in terms of issuing the standards and providing support. But as I mentioned, we do have a role to play. So over the next couple of years, you will see our focus extending to, well, let's discuss what the issues are in applying the standards. How can we support or at least flesh out what those issues are, come to some sort of consensus about what we can do, but then, of course, work with the National Treasury and the Office of the Accountant General more specifically about how we can support the sector and really focus more on building a capable state. I'm going to end it there. Thank you very much, Chairman.
Thanks very much, ASB, and for keeping to the time allocated. Let's invite FAIS Ombud. You have got 20 minutes.
Thank you, Chairperson. Appreciate it. Thank you, honourable members. I'm just going to share my screen quickly. And then, all right. Sorry, Chairperson, just want to make sure you can see my screen.
No, we only see you. We don't see the screen.
Okay, my apologies. Let me just quickly try and get it there. Okay, you see it now?
Yes, can proceed.
Yeah, thank you, sir. Right, thank you, ladies and gentlemen. Just wanted to do the plan from the FAIS Ombud side. I'm John Simpson. I'm the Ombud for the Financial Advisory and Intermediary Services Ombud Office. Just to go in, our mandates, very simply, we established in terms of the FAIS Act, also Schedule 3A entity. Essentially, we investigate and resolve complaints by consumers against financial service providers. So FSPs are basically your brokers or advisors that sell you or give advice to you on short-term and long-term insurance policies. We adjudicate any complaints between clients and those advisors if they give the wrong advice or your insurance didn't pay out because of some of the problem that the broker made or an error that they made, didn't give you the proper advice. We can investigate that and make an order against them to reimburse you, for example. We also investigate a lot of funeral policy providers who are also registered FSPs. They give out insurance or funeral insurance policies. We investigate a lot of those cases as well. That is actually the bulk of our work because funeral insurance policies are essentially the most common type of insurance policy you find in South Africa. Our complaints are resolved by alternative dispute resolution methods, such as mediation, conciliation, or recommendation. As a very last resort, and only if necessary, I'll issue a determination, which is essentially has the status of a civil court judgment. I can issue that judgment, and the person that I've made an order in favor of can actually approach the court or approach the sheriff to actually enact or enforce the judgment. So that I can do as a last resort, but I try and avoid that. Settlements are far better and quicker. Right, so our strategic plan, very simply, covers the period from 2025 to 2030. We align, obviously, with the 7th Government Administration policies or priorities, such as driving inclusive growth and job creation, reducing poverty, tackling the high cost of living, and building a capable and ethical developmental state. We also align with the 5-year National Development Plan priorities, job creation, youth employment, gender equality, innovation through technology, and transformation. So those are aspects that we keep in mind throughout our strategic plan. Just some highlights from there. We obviously have a graduate development program, which provides recent graduates with workplace skills and will increase their chances of being employed. And we actually end up employing a lot of these graduates that are employed by us. We'll employ recent law graduates, for example. They will actually work on cases under supervision. Those that we identify as being very good, we will obviously, when we advertise a position, we'll invite them to apply, and we end up hiring a good percentage of them. So that works out very well for our processes as well, because our the work we do is highly specialized. You can't just grab a lawyer, for example, from the streets and he'll be able to do this work. It is highly specialized, so that system works out very, very well for us. Our recruitment practices are also aligned to ensure all designated groups are represented in the FAIS Ombud's workforce, contributing towards gender equality and transformation. Right, in terms of pestle, just some highlights from the evaluation that we do. The COFI bill will have a significant impact on our jurisdiction. Obviously, that is in the pipeline of proceedings to Parliament. Once there and signed off, and depending on which sections are enacted, it will have an impact on our jurisdiction. That is obviously flowing through to the eventual amalgamation of our office into the National Financial Ombudsman Scheme. So when that happens, essentially all the ombudsman or financial ombudsman will essentially be incorporated in one single institution, which will make it far easier for consumers who have complaints. It'll also make it easier for the industry. We'll all be aligned and all be doing the same work in the same way, which I think will favor consumers and the industry to a large extent. Obviously, there's unfavorable economic conditions. At the moment, consumers are highly drawn to unregulated investments and scams, Ponzi schemes. So you will see them often on Facebook and on other social media, people advertising these impossible returns that you will get. Invest 100 Rand now, we'll pay you 1,000 Rand in a week's time. It's just not possible. There is no such product that gives you that. So people are drawn to this. And unfortunately, as I say, these people that do advertise these types of schemes, they are not regulated, they are not registered. So that is definitely a challenge that faces consumers. And we try and get the message out there with the FSCA to tell people, please be careful. Don't fall for these scams. We also have low levels of consumer financial literacy. Obviously, we realize that financial products are quite complicated. It's difficult for people to understand. So we try and educate people as much as we can to try and find out about a product. Just the basics. Doesn't have to be complicated, just at least the basics in terms of understanding what's the basic aspect of this product that you're buying. Cybercrime, we obviously hold a great deal of personal information in our office. So cybercrime is high on our radar to ensure that we're protected or safely protected from cybercrime. The future amalgamation of the office into the NFO, I've already spoken to. So those are just some of the aspects we obviously take into account. The strengths that we have and weaknesses and so on would be we have a clear legislative mandate. The FAIS Act is extremely clear on what our mandate is, what our jurisdiction is. So that helps enormously. We're totally independent. We have the ability to issue determinations where necessary. We also have a very good reputation in the industry. So we're very happy about that massive strength that we do have. Collaboration with the Ombud Council, the FSCA and industry associations is massive opportunities that we have to increase our brand awareness and inform consumers of the existence of the office. We found specifically that consumers are very aware of the FAIS Ombud, and we get lots of calls, and it's been increasing on a year-on-year basis. So that we see as an excellent progress and an excellent sign that consumers are becoming more and more aware of the existence of Ombud offices, which is excellent. We do face some sort of challenges. Obviously, we have difficulty in recruiting specialized staff. As I say, what the area we operate in is highly unique, highly specialized. So, it is quite a struggle to find specialized staff. There's also staff uncertainty due to the future amalgamation of our office, and our office is unionized. So those are some of the challenges, but we obviously face them as you do all challenges. So it hasn't been an issue or a serious problem up to now. Measuring our performance, we look at consumer satisfaction surveys. We want consumers to give us feedback on how did we perform. That's extremely important to us to understand, are they satisfied with the work we do? Did we deliver a good service? So that's one of the things we measure. We also look at support department operations and service targets, measuring, are they doing their job properly? We're looking at the stakeholder engagements, committee meetings, union meetings, making sure that we meet those targets and we do what's necessary to involve everybody and to make sure that we're compliant. We look at brand awareness, consumer financial literacy targets. We're trying to determine, are we having a measurable impact? Are we actually doing what we're supposed to be doing? So those are important aspects that we do to measure our performance and make sure we're doing it well. I can also mention on that aspect, we have registered on the Hello Peter site, also on Google reviews. I noticed that we were getting extremely bad reviews in the past there, and we weren't responding to them. So we registered for that, and now we respond to complaints, and we also encourage people to review us on Google so that we can get a more social face out there, so that people can look at it and see, is this government office performing? And I can tell you our scoring has increased dramatically, and I'm very happy to see that people are starting to rate us very, very well. So that's an extremely good sort of measure for us. Then measuring performance, we obviously look at our core mandate targets, which are consumer satisfaction surveys, and our closure times and efficiency ratios. Are we closing the stuff in good time? Are we looking at it properly? Are we evaluating it properly? Are we closing as many or more cases that are coming in, new cases that are coming in? So all these things we measure to deliver a good service to the industry and to consumers, and that we regularly exceed all those targets. So I'm very happy to report on that. Support department operations and service targets. Obviously, we're always aiming for a clean audit. We're aiming to pay invoices within 30 days. So we regularly meet those targets as well. Stakeholder engagements, union and governance committee meetings, and audit engagements. We also meet those targets. Brand awareness, consumer financial literacy targets like media releases at least once a month, social media posts at least 100 a year, and at least 4 newsletters per annum. So those are some of the aspects we also measure. Key risks we have identified is obviously the future amalgamation of our office. Key man dependency, myself, I'm the only Ombud in the office. We are still looking for a deputy, and that is in the process of being initiated again and finalized. Then fraud and corruption, something we always have to be aware of, obviously being a government entity. So we're always on the lookout for that. Cybercrime, as I mentioned, a major risk for any organization. Compliance risk, making sure that we're fully compliant at all times. And then change management risk, obviously, as I said, the amalgamation. Business continuity, making sure if there's a disaster, we can still carry on working. Funding, making sure that the levy system is working and that the FSPs are paying. And it's about 12,500 of them. So the FSCA manages that aspect for us. Obviously, it is a risk that we always have to be aware of. And our reputation. Our reputation is everything to us, that we're independent, always issue the right decisions and make fair decisions. That is extremely important to us, and it hinges, or reputation is what our quality hinges on. So those are some of the aspects we obviously look at. We have 22 targets in our annual performance plan. Unqualified audit opinion, paying 100% of valid supplier invoices. Aim is at least 51% female staff, 92% black staff, and 2% employees with disabilities. 9 trainees appointed at least per year. Achieve an 85% satisfaction rate from consumers and the industry. Respond to all complaints within 4 days at least. And then 92% of complaints closed within 9 months, and 85% at least closed within 6 months. We regularly meet these targets, so I'm very happy to report on that. 75% of our complaints must be closed within 3 months. 20% or less of our complaints must not be older than 9 months, and that we also meet very, 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 very well. We must have an 80% efficiency ratio. That means closing at least 80% of the new cases we receive in a given year. Then at least 13 national Treasury submissions, governance committees, internal audits, external, one Money Smart Week we must attend. That's once a year. Social media posts, press releases, and newsletters. Thank you very much. That's all I wanted to present. Sorry, I was pretty quick. If there's any questions, happy to answer them.
Thanks, FAIS, Ombud, and also saving time. The next item, we call upon the Ombud Council. Ombud Council, over to you. 20 minutes.
Good morning, Chair and honourable members. I hope you can hear me. It's a privilege to be here. This is the first time that the Ombud Council will be presenting our strategic plan and annual performance plan to this committee, being a fairly new entity. So the first few slides of my presentation will focus on just providing a little bit of context about the Ombud Council, and then we'll jump into our APP and strategic plan. I have with me my colleagues, fellow EXCO members of the Ombud Council. My colleagues, Piwe Dube, our Head of Operations, will be driving the slides for me. If we could go to the first slide then. Just to recap our mandate, the Ombud Council is in effect the regulatory oversight body of the Ombud system in the country. We're created by the Financial Sector Regulation Act to assist in ensuring that financial customers have, in effect, an Ombud system that works for them. Our statutory functions include monitoring the performance of all the financial Ombud schemes, recognising industry Ombud schemes and approving their governing rules, promoting cooperation, coordination between schemes and ensuring there aren't jurisdictional challenges, and importantly, with a view to financial inclusion, promoting awareness of and publicising Ombud schemes, the Ombud system, and what the system does. To perform these functions, we have a full set of regulatory, supervisory, and enforcement powers over Ombuds and Ombud schemes, not over financial institutions, but over the Ombud schemes. And our regulatory powers include the making of Ombud Council rules, which are binding subordinate regulatory instruments. Next slide. Just a recap of the Ombud schemes we oversee. There are two statutory schemes. You've just heard from the FAIS Ombud, and you will be hearing from the Pension Funds Adjudicator later. They fall under our oversight. And then there are the recognised industry Ombud schemes. Of those, the largest and most substantive scheme is the National Financial Ombud Scheme, or NFO. The NFO is an amalgamation of 4 previous schemes for banking, credit, life insurance, and non-life insurance, which I think has been a significant improvement on reducing the complexity and disjointedness of the financial sector Ombud landscape by having these 4 schemes merge into one. The consumer access to dispute resolution has been significantly improved. And then there is a very focused scheme for complaints about members of the JSE, which is also recognised as an industry Ombud scheme. Moving on. I think what is important to emphasise is that the Ombud Council, since inception, has operated against a background of regulatory reform. Last year, the National Treasury published a policy statement called the Simpler, Stronger Financial Sector Ombud System, which was its response to a comprehensive diagnostic review of the Ombud system that was carried out by the World Bank. And amongst other recommendations, I think the key recommendation is that the financial sector Ombud system was much too fragmented and needed considerable consolidation. So until, what this slide demonstrates is, until March of last year, you had 5 industry schemes for credit, long-term insurance, short-term insurance, banking, and the JSE, plus 2 statutory schemes. So it was a complicated landscape for consumers to navigate to figure out where they were supposed to go if they had been disappointed by players in the financial sector. So in March of 24, the Ombud Council granted recognition to the NFO, the National Financial Ombud, which is still an industry ombud scheme, but it is an amalgamation of 4 previous schemes, as I explained. And so the current scenario, the landscape is significantly simpler, but as I think John, Advocate Simpson of the FAIS Ombud also mentioned, there is further consolidation on the cards. So within this year, 5-year planning period, all going well, it is expected that the FAIS Ombud will also merge into a slightly restructured version of the NFO, and there will then only be 2 schemes. The Retirement Funds Ombud, which will be the new name of the Pension Funds Adjudicator, will still remain outside for a while. But then the longer term policy intent, should that materialize, is that the Pension Funds Adjudicator or Retirement Fund Ombud will also merge, and we will reach a point in the longer term where there is a single port of call for complaints about financial institutions. So I think this backdrop is just important to highlight why some of our strategic focus is on supporting regulatory reform. We can move to the next slide. Just very quick recap on what we have achieved since having been established, where our core mandate is concerned. Given the responsibility to promote awareness of the Ombud system, we have embarked on quite significant awareness campaigns to do so. So hoping that is contributing to overall awareness and usage of the Ombud system by financial customers. I mentioned supporting the amalgamation of the NFO process, which has now celebrated its first anniversary. Where regulatory instruments are concerned, we developed some for the FAIS Ombud, which included increasing the jurisdictional limit of the FAIS Ombud, so the Ombud can now make awards. Previously, the limit had sat at, for about 20 years, the limit had sat at 800,000. That is now being increased to 3.5 million. We support development of legislation to support the ongoing reforms on an ongoing basis, and we've also streamlined data reporting and conducted ongoing oversight. If we can move then just to our institutional context. As I mentioned, we're still a very young agency. The year 24-25 was the second year of being listed as a PFMA Schedule 3A entity. It was also the second year of being levy funded. In our first year after listing, we had a combination of levy income, but still some funding from the fiscus. In 24-25, we were solely levy funded. 24-25 was also the first year in which the Ombud Council operated independently of the Financial Sector Conduct Authority. Prior to that, there was a shared services support arrangement in place where the FSCA provided financial management, procurement, HR, and risk management support to that. We now, I'm proud to say, we now row our own boat from that perspective and have achieved operational independence. We have also filled all posts on our very small organizational structure, which you will see. We achieved a clean audit for our first year of being listed in 23-24. And as I mentioned, our 25 to 2030 strategic plan, which we're proud to talk to you about today, is our first 5-year strat plan. We can jump into that strat plan then. We have 3 strategic priorities for the planning period, and those priorities map to the 3 programs of work. As is common with public entities, we have an administration program, which is really just about ensuring that we maintain a well-governed and efficient organization. We have a program focused on consumer awareness and education. And the emphasis here is on leveraging the broader financial sector education framework to work collaboratively with other entities. The financial education space is a somewhat crowded one, and it is necessary to really collaborate effectively with the work of others. It also makes sense for us as a small entity not to try to reinvent the wheel, but to really leverage the work that is being done by others and support it where we can with our expertise and our mandate, and to the extent possible through our budget. And then, as I mentioned, the third key program is to focus on Ombud system reform, which is about using our existing powers to perform our existing mandate, but at the same time coordinate the streamlining, reform, and future direction of the financial Ombud system that I outlined in a previous slide. The next slide just maps our strategic outcomes to the medium-term development plan. And as you will see, being a market conduct financial sector regulatory authority, our focus is the internal focus, which is on improving the overall governance of entities, which links to the priority of a capable state. But then where our core mandate is conserved, it's about driving outcomes around a broader, more sustainable economic policy environment. We see the existence of an effective Ombud system as an important underpin to trust and confidence in the financial sector and consumer awareness of their rights to complain and the ability to do so effectively as supporting financial inclusion and confidence in the sector. We can then move on. Just to spend a bit of time then on the APP targets for the year, where our first program, the administration program, is concerned. This is really about just ensuring that all of our governance and internal processes and policies from a financial performance reporting, compliance and risk management perspective are functioning well. So we are targeting unqualified clean audits. We're also focused on ensuring we've got a newly developed internal audit system and ensuring that our internal audit processes also confirm that we're meeting our governance objectives. And so the focus here is on really further enhancing our risk frameworks and compliance frameworks. And of course, from an employment equity perspective, we have, small as we are, we have a specific EE targets which we focus on meeting and which we have actually substantively met already. So on the next slide, the second program around consumer awareness and education. One of the things we've realized is that in order to monitor the effectiveness of the work we have done and intend to continue doing on promoting awareness of the system, we need a baseline. So we need some insight into what success would look like and what we are comparing ourselves to. So one of our programs planned for the year is to develop a baseline study to appoint a service provider in a credible consumer research entity that will conduct a comprehensive study of what the current levels of consumer awareness and usage of the Ombud system are, which then can ultimately, over the longer period, be used as a baseline to measure success by rerunning the survey at a later point. In the meanwhile, we have focused on developing the specific targets on the number of consumer awareness materials we will publish and activities we will carry out. So this is a combination of publications through multiple channels and media, and also participating in outreach programs, activities, webinars, both on our own and together with other stakeholders in the Ombud space. Particularly, we work closely with the FSCA, consumer education team, and also the communications teams of the Ombud schemes themselves. Moving on then to the third program. The third program is really where we focus on the reforms and improving the overall effectiveness of the Ombud system. So one of our responsibilities is to monitor trends in complaint reportings, in complaint data. So what is really causing consumers to complain? What are the areas of dissatisfaction with the financial sector? And what is the conduct of financial institutions that is causing that satisfaction. We have a responsibility to keep the Minister of Finance and the financial sector conduct regulators informed of those trends and of those conduct risks. So we've developed a program of work around ensuring that we will receive the appropriate streamlined reports from the Ombud schemes themselves on the complaints they deal with, analyze and review those to identify trends and report those to the Minister of Finance and the regulatory stakeholders I mentioned. So, and then to take that work further by identifying possible proposals in conjunction with the regulators, helping to identify proposals to respond to some of those identified conduct risks. So we're really hoping that in this way we can contribute to policy development in the conduct risk space from with the National Treasury policy teams, and importantly with the FSCA and also the National Credit Regulator, because complaints, although the credit space falls under a separate ministry, the complaints sort of environment, the National Financial Ombud does deal with credit complaints as well. So there is a collaboration taking place there too. We also have a work stream which is about implementing the specific reforms that have been proposed in the National Treasury policy paper that I mentioned earlier. And this is about working with the National Treasury and others to actually provide input into draft Ombud scheme legislation. So there is legislation planned which will lead to amendments of the Financial Sector Regulation Act provisions that govern the Ombud system, and which will further consolidate and strengthen the Ombud system. And the Ombud Council is part of the task team developing that legislation. And then the last targeted outcome there is around, while we are working towards this more consolidated system, ensuring that the levels of coordination in place between the existing schemes are strengthened. And we've spending time particularly working with the FAIS Ombud and the National Financial Ombud, the NFO, given the fact that down the line there is expected to be a merger of their responsibilities, to ensure that in preparation for that, their processes and approaches to complaint handling are as aligned as makes sense given their slightly different sectors. If we can move on, so just a very brief recap of our budget. It is a relatively modest budget, just under 27 million rand for the current financial year, which is almost entirely levy funded, together with some interest. The nature of our work is such that it is driven by our people. We don't have much in the way of infrastructure or outsourced services, so employee cost makes up a sizable point. But then, in line with our mandate, the other biggest chunk of expenditure is aimed toward consumer education and awareness campaigns. And then lastly, can move on just to illustrate our organogram. We are a very small organization. We have 8 staff members, which is now our full staff complement. We fall under the governance of a board. The Ombud Council board, under the leadership of Ms. Eileen Meyer, is appointed by the Minister of Finance, as is the Chief Ombud. I'm supported by the heads of three divisions or 3 areas of responsibility, which is the regulation and oversight, which is our outward-facing delivery of our mandate, our head of finance, and who also looks after supply chain for us, and our head of operations, and then a very, very small group of additional individuals supporting that work. Chair, I hope I have further saved time. Very happy to answer any questions you may have about the Ombud Council and our plans. Thank you very much.
Yes, thank you, Ombud Council, for your presentation and also saving the time as you've said. Let me invite honorable members to ask questions and or make comments. Over to you, honorable members. Let me check the names. For now, I see Honorable Alexander, Honorable Mulefe. Yeah, Honorable Alexander, Honorable.
Honorable Chairperson, my apologies. I'm also in the queue. I'm just looking for the icon to raise my hand. Note me, please.
Okay, Makuel, Squati, Van Rooyen. Okay. Honorable Alexander, over to you.
Thank you very much, Chair. My question is specifically for National Treasury. National Treasury, under the sound fiscal controls and improving fiscal discipline, I see that there was a target to establish an investigatory committee for our financial misconduct. My question is to National Treasury, is this where the responsibility will start and end? Or is there going to be a focus to get some kind of conclusion to these investigations? Because as many of our financial legislation has consequence management within them for financial misconduct, we rarely see individuals get prosecuted and held accountable for this financial misconduct that we are seeing grappling in our government systems. Thank you.
Thank you, Honorable Alexander. If possible, we'll request honorable members to show face for live streaming by the media. Honorable Mlefe, over to you.
Thank you, Chair. My questions are to the National Treasury. Firstly, I could not get a sense of the performance management system that is being implemented by the National Treasury. So what is the performance management system that is at play here? Because I found it difficult to follow what the key performance indicators are that are measurable, that we are able to follow at the end of the year. I think that a lot of the objectives were, the key words were to monitor this, to develop this system or that, to give assistance, assess, continuously assess, but I could not get the measurable objectives in each of the areas that were presented today. And thirdly, I would like to get a sense of in the 2024, in this year, in this financial year, because the budget has not yet been approved. How much has been spent during the unapproved budget period, or how much does Treasury anticipate it will spend during this unapproved budget period? So the 45% period, and then if we do go into the 10% period, how much do they anticipate that they will spend? And if there are any contingency plans, should the budget go beyond the 31st of July? Because I know everybody is gung-ho that it's going to happen and so on and so forth, but it's always prudent to budget for the West. And then seeing that the transfers and subsidies are the biggest expenditure item, I would have expected at least a briefing on the largest transfers and the largest subsidies, because they make a significant chunk of the Treasury budget. And then the ASB. I'm not sure that your standards have a requirement, or there is a standard for reporting on the social and environmental impact of the activities of the entities as part of the reports, of the annual reports. I know it is a requirement in FAIS. I think it may be a requirement under GRAP as well, but I'm not sure. I think number 10 or something, statement number 10 or thereabouts. But it is not often that one sees that the entities actually report on their social and environmental impact. The departments that come across to us to report, and recently Parliament was reporting to us, and one could not discern social and environmental impact reporting. I think they call it the triple bottom line. Is it the requirement of GRAP or your standards? And if it is not, why is it not? Secondly, I think that the biggest and the most important consumer of the financial statements that are being produced, that are being reported in terms of your standards, is actually Parliament, because Parliament is the ultimate shareholder of these entities and government departments and so on. And these entities come to us to report about their activities, and we are the consumers of the financial statements. I don't know to what extent, as probably the most strategic consumer of these financial statements, to what extent at least SCOF or Parliament is involved in the development of the standards. And after all, it's a development of a product that we are going to consume. Have you considered involving us in the development of the standards, and even perhaps inviting a member of the finance people in Parliament, so the appropriations or SCOF or the NCOP committees, to at least send one board member to be a member of the ASB board, because we are the consumers of the framework, of the output of the framework that you're designing in the standards. That is going to determine how we get reported to. And then we have a unique situation this year that the departments and entities are spending, and yet there is no approved budget. Now, there is a provision in the PFMA that they may spend up to 45% up to the 31st of July. But this is, although the spending is not abnormal, it is provided for in the PFMA, but this is an extraordinary situation. Is there a standard that shows or that requires the entities to report the expenditure that was incurred during this period, so that when we read the financial statements, we can immediately see whether they went above what was legislatively authorized or not? But also, because it's an extraordinary period, it would be useful for us to assess what departments did during this period. But it would be a requirement for them to disclose that we went into the financial year without an approval, and then these are the measures that we put in place. I think the PFMA talks about the emergency measures that we put in place. These are the contingency measures that we put in place, and to report also what actually happened during this period. I think that it should be part of the reporting requirements in the standards. I don't know, it's just an idea that I have, that perhaps maybe that will be useful to us as the users of the financial statement. And also, what is the performance management system that the ASB is using? There was a general comment that some entities do not apply standards. So what is being done about it? And when entity has not applied the standards, is there not a requirement in the standards that they should disclose that so that we can immediately see that they did not follow the required standards? But also a two-way report, perhaps by the Auditor General or the ASB, to say that this and that entity did not report the standards, and which entities have delayed in approving the effective dates of the implementation of the standards. And is there a reporting requirement in the standards that they should indeed disclose that they are delaying in implementing the standards? And lastly, there was a comment in the presentation that, when I quote verbatim, we would like to focus on developing education material for users. Well, this is very, very important, because half of the time Auditor General come and they come with this big terminology and financial statements and so on, and we really sometimes don't know what is happening. And we rely on organizations like yours to train us as users, especially Parliament, because we are the main users representing the taxpayers and the voters, and overseeing the use of their tax money. I think that it is quite urgent that you develop a training program for the users of the standards, as well as what to look out and what the requirements are, what the legal requirements are when we read the financial statements. I think that the focus on developing education, actually, I could not see a measurable target with respect to that particular important objective. And I would also recommend that perhaps what you may want to do is outsource it, because you claim that there is no capacity from a communications point of view to develop the material and to teach what is in your standards. But you can outsource it to the educational institutions to provide short courses, and also maybe even to develop courses as part of accounting training in the universities, that there should be a course on the GRAP standards, because I think there is an overemphasis of FAIS in the training for accountants. I'll stop there for now, Chair, because I'm coughing. Thank you.
Thank you, Honorable Mlefa. Honorable Squad.
Thanks, Chair, and good morning to all my colleagues and all stakeholders from National Treasury and other entities that are here this morning. Chair, I'm not sure Honorable Molefe is stopping because he is done, not because he's coughing, as Karatsu says. Chair, on National Treasury, one of the most things that I think we needed to be looking at is in terms of the issues of climate change. That is already batting on our communities, and we are actually on the receiving end. Most of our communities are already carrying the burden. We have seen in KZN, we have seen in the Eastern Cape now of recent, which tells us that there is a need for us fast-tracking programs in terms of climate change, because the reality is already impacting on those provinces that I've already spoken about. Now, this is also not only dealing with the communities, but also it has got an impact in terms of major financial losses and budget adjustments, because ultimately we'll have to deal with those unforeseen circumstances that are caused by those challenges. Now, National Treasury is actually setting the target for the development of national disaster risk financing policy for 2030, which I thought it would actually be more feasible to actually bring it forward and undertake it within a short term to enable the development of mechanisms and institutional capacity such as grant frameworks, aligning existing financial instruments and state insurance capacity, and expansion to finance disasters as a result of the development policy, and as well ensure that we are able to make it feasible for the country and the continent to deal with the financing mechanisms, particularly in terms of these disasters. Therefore, Chair, I would actually recommend that National Treasury should bring forward the National Disaster Risk Financing Policy to be finalized in 2027 instead of 2030, so that we are able to have mitigating risks, to mitigate the risks and ensure that we are able to respond in a better manner in terms of these disasters. Secondly, Chair, the strategic plans locate the review of the provincial equitable share and the local government fiscal framework to be reviewed in 2028. And recognizing the current process of the white paper review and the prioritization of local government, shouldn't the National Treasury, as of now, undertake the local government fiscal framework review after the finalization of the white paper review, so that we are then able to make sure that the local government fiscal framework review is undertaken by 2027 instead of 2028, which will also be able to assist National Treasury to deal with the processes that they must unfold in terms of the equitable share. Chair, the other one is in terms of the infrastructure investment. On the aspect of increasing public infrastructure investment, a major weakness of the 3 decades of democracy in relation to infrastructure is the inability to sustain effective maintenance of infrastructure. The level of maintenance expenditure has significantly deferred prospects of growing our economy as visible in energy, rail, harbour, road, and water infrastructure, and many other areas that affect the development of our economy. The problem begins in planning and budgeting, and a change is therefore required. And the issue is, what are the measures that National Treasury will take to ensure regulations in relation to infrastructure, maintenance and strengthening, and compilation to improve the overall efficacy and the efficiency of reliability on a public infrastructure. And more often, Chair, beyond that is that we say now we have a better allocation in terms of the budgeting, which is R1 trillion. But if you look at the maintenance of what we have and versus what we are going to be developing, it's important that we are able to balance, particularly the infrastructure that is there, so that we are able to make progress. By the time we implement new infrastructure, we do not necessarily lose the infrastructure that we have already implemented because of lack of maintenance. And therefore, the recommendation, Chair, is that we need to add in terms of the indicators for the strategic plan to improve public infrastructure maintenance and provide reliable and affordable public services, so that it becomes part of the indicators and not just a by the way issue, but also that we are able to continue to monitor and be able to have accountability in terms of the infrastructure maintenance. Otherwise, it will continue to elude us because we do not necessarily have it as an indicator. So it will continue to evaporate when we are supposed to deal with issues of infrastructure. And I don't think we have actually dealt much with the issue of maintenance, except for new infrastructure that is going to be rolled out. Chair, in terms of the ASB, the FAIS has actually mentioned that they are able to utilize the graduate development program, which I think is very, very much a progressive way of not only imparting skills, but also make sure that we're able to prepare young people for work environment, but also deal with issues of experiential learning and give that opportunity to young people. And I would want to understand in terms of the ASP as to whether they have such programs which would as well prepare young people, but as well it can build a cohort in terms of outreach, which do not necessarily have to be part of the staff, but when you train these young people as graduate trainees, which is a cohort, you are then able to send it out to be able to do the work for ASP and be able to make sure that they can do more work or expand the work that they're doing through this graduate program, but also which will be creating opportunities for our young people. I think that would actually be welcome. But as well, Chair, I think Honorable Molefe has actually dealt with it as well at some point in terms of the reporting on environmental and the social governance, which is a helpful approach to increase and shape investment and business operations of institutions. Now, the issue is what is the domestic context features need to be included in our accounting standards to ensure that we enhance a focus on economic transformation that is related to reporting. And secondly, Chair, is with the material irregularities. And the issue is, or the question is, with the introduction of material irregularities by the 2018 Public Audit Act Amendment, does the Accounting Standard Board deem the development significant to be factored in the accounting standards, or are there measures to report that currently? Secondly, or thirdly, Chair, it's a debate on the degree of materiality in relation to material irregularities, which has arisen on whether to lower the threshold to enable the state to recoup more funds after the AG has recouped and prevented the billions from being lost. Now, this recognizes that the mandate would be required to enable a reporting of a lower threshold to distinguish the distinguished material irregularities. So, is it what would be the impact of that as well as we deal with the issues of the threshold? I think I left just one, Chair. Just one on the National Treasury. As I was dealing with the ASP, I just realized now. It's related to the state-owned enterprises, which we believe is actually playing a critical role in the economy and various public goods and services requires public investment as private sector participants do not necessarily have an appetite for assets that do not generate adequate returns or profits in that landscape. It is therefore incumbent on the state to make sufficient investments to strengthen our public entities to continue advancing their national developmental state? And what is the strategy and plan of the National Treasury? First, to support state-owned companies in financial distress to be a going concern, and secondly, to grow profit-making companies and the business divisions of SOEs as part of stimulating economic growth and strengthening our network industries. And one of the recommendations, Chair, even before the response, is that the National Treasury should look at the inclusion of the development of a medium-term and long-term funding strategy for state-owned entities by the next financial year, 26-27, and include a target to develop a discussion document on funding state-owned companies. This critical aspect of recognizing the intention to establish a holding company so that we are not found wanting as you establish that holding company for the state.
Thank you, Honorable Scott. Honorable Makuel. Honorable Makuel, are you there? Okay. Let me take Honorable Van Rooyen.
Okay, thank you very much, Chairperson, and a very good morning to all who are in attendance. Chair, the iteration of debt stabilization was made by, I think, the Deputy Minister at the beginning of the session. But I don't think as a committee, we have been given the details of the strategy to stabilize debt. I'm not sure if there is the strategy existing that can be shared with us with clear timelines. So as from an oversight perspective, we are able to monitor if this debt is really being stabilized as undertaken by National Treasury. Secondly, on program number 6, the program that deals with international relations, which of course is experiencing some increase in terms of allocation. I think it's important, Chair, and I agree with the summary that has been made by the presenter, that we need to analyze the impact of what is being funded in this program. But also, are we really realizing value for money for participating on some of these activities? So I'm not sure this analysis, because they are undertaking to be doing this analysis. I'm not sure, should we expect that to happen in this financial year or anytime soon, or maybe in the next financial year? Because it's important for us to know, Chair, if the money that we spend on this program is really benefiting our developmental mandate. Thirdly, on program number 7 that deals with revenue administration, I think as a committee, when we welcome the allocation that has been made to SARS, we further agreed that it will be important that we get an update on quarterly basis on how this particular allocation is yielding in terms of revenue enhancement. But also, one was expecting that maybe in this presentation, one will get to know what exactly is being funded. So as from today, we are able then to monitor if there's any progress on each and every area that is being funded, but also the details, not only committing that they will be funding for modernization. Let's get to know how much will be going for modernization, and how much is expected, of course, out of this particular investment as part of the expected revenue, which I think the last time we had a presentation, it was projected to be 500 million, per annum. of an increase on revenue, collection, So I think a breakdown of these specific allocations and also an indication of what is it that is envisaged as revenue from each and every allocation. And then fourthly, Chair, I hear the submission made by Honorable Squati on marrying the white paper process with the DORA review process. My problem, Chair, is that it's difficult for me to agree to such a proposal because the DORA review process, as we are all aware, is something that has been promised and stated in many plans for the past 10 years, if I'm not mistaken. So I'm not sure, is there any clear review plan of DORA? Because if we don't have that plan, then it will be suicidal for us to recommend this process to be married to a white paper process, which we also don't have the details of when will that white paper process be concluded. So my suggestion is that National Treasury should present to us a plan of reviewing this thing of DORA, because it's becoming very urgent, given the fact that most municipalities economically they find themselves to be extremely struggling. So obviously, this particular activity should be expedited, and I don't think it will be a good idea for us, to marry the two. Maybe if National Treasury can give us the details of the review plan. Is there any plan to review, or is something that we'll continue to hear every year without any progress on the matter? Lastly, Chair, there is an outstanding matter. Well, it's not part of the presentation, but there was an undertaking at the beginning of our term, Chair, by the Minister that we will be updated. I think he went further to say maybe quarterly, if my memory serves me well, about the progress on dealing with the matter of the integrated financial management system. I hope we are all aware, how much money was lost by the fiscus as a result of this particular matter. Besides the case that we have opened as a party, there was an undertaking in the committee that by National Treasury that they will be updating us on this particular, on the development on this matter. And I don't know the last time I heard, that was the last time in fact I heard of the matter from National Treasury. I don't know if they are still sticking to that undertaking. If yes, when should we expect an update on this matter? Thank you, Chair.
Thank you, Honorable Van Rooyen. Honorable Makuela, are you there? It seems we have lost her. Okay. Can I call National Treasury followed by ASB, FAIS, Ombud, and the Ombud Council? National Treasury, over to you. Can you please respond to the questions that are relevant to you?
Thank you, Honorable Chairperson. Chairperson, with your permission, I'll kindly ask Ms. Lauren Sinet to kick us off with the responses. I will thereafter come in and we'll also just check in with the Deputy Minister if he would like to come in as well. Chairperson, in that order, I'll hand over to Laura.
Thank you very much. In respect of the question around the performance management system, it is important for us to measure the discrete obligations that Treasury has, and that falls for our performance system in 3 areas. We must measure our thought leadership processes. Though that work, it's often research work, it's review work, it's evaluation work. That work informs future policy processes. So the first kinds of work that we measure, you will often see those indicators referred to evaluations, reviews, or publications. It's an important part of the beginning of our process, and much of the work that you see come to fruition would have started sometime previously and historically as part of our thought leadership. The second kinds of indicators we measure is directly related to our policy legislative responsibilities. There you'll see we submitting legislation, we developing policy frameworks, because that provides us with the guidelines and the framework, which is in respect of the third kind of indicators that we monitor, which is our implementation indicators that relates directly to our outcomes. And there you'll see we use quantitative indicators. What we are doing is shifting our policy work into more quantitative indicators where we're measuring impact. It is a challenge to measure impact on policy proposals, because in many of them, Treasury is an input into a process that is not within Treasury's control, neither should it be. It either is located in Cabinet, or more importantly, it is located with yourselves in Parliament. We then measure the process towards delivery of our outcomes into then the higher order decision making. And that's why you see this mix. But there are, without a doubt, specific indicators that talk to things such as amending grant framework. So you would be able to measure the actual amendments, the changes to the budget. You will see those actually coming through. The new equity share formulas, you will actually be able to, you will be considering those, and you will be able to measure them, as well as the amendments to our legislation will come through as actual outputs. Importantly, also, and irrelevant to the last question, our focus is not in terms of our strategy. I'll go to our APP now. Our strategy is in terms of the totality of a system, as opposed to one component of a system. And so we're looking at modernizing and automating the financial management system, and there we talk about the components thereof. You'll be able to measure those components. It's a specific target. But the specificity in our plan is really articulated in the APP. The strategic plan over 5 years, you'll see that our outer years will more than likely shift those targets to bring them closer as we deliver on our APP. So, excuse me, certainly publishing a strategy, amending a grant framework, but also such things as our catalytic projects are definitive, and we can provide you with a list of those catalytic projects, which is also a quantitative indicator. And so that's why you would see, because of the nature of the work that Treasury does, that you have this 3 different kinds of indicators. In terms of climate change, whilst the strategy indicates that we'll have a policy developed by 2030, it is important to make reference to what we're doing in the APP, because that's our near-term plan, where we're going to be developing the strategy. The strategy will then inform the policy, and we will then be able to assess the extent to which we can bring that closer. So we are, it is an ambitious plan to develop the strategy in this year, but we are convinced that that strategy will then, as I say, inform the planning for the policy, and we may, and we will then in all likelihood be able to amend that depending on our evidential decision making. In terms of the local government, the review of the local government framework, it is also important to note that in our APP, we have a very specific indicator that talks to phase 1 of the review of the local government fiscal framework will be completed. Part of that phase 1, similar to the climate change, includes the design and plan of the further phases. So we will be able to then, based on evidence, make a decision as to the further consequential actions that will need to be completed. In terms of analysis of IREP, certainly as part of the first phase, where we've assessed that it would enhance economic policy to have a direct link to our advocacy work, but equally it will strengthen our advocacy work to have the direct link to our policy thinking, that we've put these two previous divisions into a single division. Going forward, we are now assessing the work that division will do in terms of both efficiency and effectiveness together, which will allow us to assess impact. So certainly that is part of the work that we're going to be doing. Thank you, DG.
Thank you, Laura. Chair, with your permission, there are a few colleagues on the line as well. May I kindly ask Pokhale Letseng, our newly appointed Deputy Director General for IGR, to assist with the questions on local government as well as the one on infrastructure. Pokhale, can I hand over to you?
Thank you, Honorable Chair. Thank you, DG. Good morning, members and everyone on the platform. So just to start with the issue of the infrastructure maintenance, that if you look at the number of grants, either your provincial roads maintenance grants, the emphasis is on maintenance, and that even there's only a certain portion that we can use on the rehabilitation of roads, but the emphasis there is on the maintenance. If you look at the education infrastructure grant as well, the emphasis is on maintenance. I think there's a percentage in the grant framework above, I think around 50%, that says provincial departments of education should spend about that on maintenance and lesser on new schools. So that's the emphasis. Same as health, we know that health in the past, they went on building new facilities much more, but the emphasis in the recent years has been that money go to maintenance. Same as in the local government, if you look at the municipal infrastructure grant as well, it's got even a percentage there that says even for emergency maintenance, 10% can be spent, but the emphasis really is on the show that the two spheres of government focus more on maintenance than on new infrastructure. On the local government fiscal framework, just to indicate that we've already started, we've issued the terms of reference. We're at the bid evaluation stage, so that work is starting. And just also to indicate that as National Treasury, we are chairing the finance stream of the white paper review. So obviously part of this work, we anticipate that will influence the white paper through this work. So we're working together with DCOC on the white paper. So I thought I should indicate that we are hoping that with this results from this review will also influence white paper. Thank you, Chair.
Thank you, Okali. Chairperson, with your permission, can I then kindly request the CFO, Onati, to come in on the two questions around the spending during the period in which the budget needs to be approved, as well as the transfer payment question as well. Onati?
Thank you very much. Through you, Chair. So the first part, if I just look at the largest transfers, largest subsidy, if we're just looking exclusively at the National Treasury vote 8, the largest transfers and subsidies there would be for the South African Revenue Services, the Financial Intelligence and State Security. So that's program 8 and 9, followed by Public Finance and Budget Management. And Public Finance and Budget Management is the 2 divisions within the National Treasury, which is Public Finance and Budget Office. And then if we look at the direct charges, the largest transfers in that category would be the provincial equitable share. So here, the direct charges that we are responsible for managing is 780 billion. 600 of that is the provincial equitable share. And then the other 2 significant notable transactions in the year that we just closed, there was 100 billion relating to the gold and foreign exchange contingency reserve. That was a transfer, and then another 64 billion to Eskom as part of the loan debt relief package to Eskom. And then you also asked about the unapproved budget period, our expenditure, how we're performing against the 10% limits. So for April, and this is again looking at the National Treasury vote on its own, and then I'll look at the direct transfers on their own as well. So for April, the National Treasury, we were at 9% out of the 10% limit. And then for May, it was 7.5%. So cumulatively, year to date, we're now at 16.5% as the National Treasury. So at these averages, we should remain well below the 45% limit by the time the expected bill is passed in around July. So at this point, we're not yet concerned given our performance, and each month we are watching it in terms of when we get large requests, we always make sure that we're not threatening this limit. Then if we look at our direct charges for April, 5.7% of the year's budget was spent, and then for May, 5.4%. That gives us year-to-date 11.1%. So these are even lower in terms of that threshold or limit. So those are the numbers in terms of our spending of the unbudgeted period. Thank you.
Thank you so much, Onati. Chairperson, I will then come in with a response on a few of the other questions. The question from Honorable Alexander around the Financial Misconduct Investigative Committee. Chairperson, this is part of the broader review we are doing on the PFMA, and this is a new committee that's being proposed as part of the amendments. So obviously there is a process in which those amendments will go through Parliament as well as through the public consultation process. But it's really around to drive enforcement and also consequence management. And the primary objective and mandate of this committee is really to investigate allegations of financial misconduct related to material non-compliances under the PFMA. And this Financial Investigative Committee will then have the mandate to then investigate these allegations that's in the public service, as well as to also refer these, especially where there's criminal elements, also to refer them to law enforcement agencies. The question on the SOCs by Honorable Zakati. Obviously, the legislation does allow the National Treasury to intervene in cases where there's where there's either performance issues or where what you would call where those entities are under distress as well. You would see we're also working with the current PFMA amendments to strengthen that part to allow National Treasury as well as executive authorities to then intervene a lot more decisively in terms of putting institutions under administration. But for SOCs, I think the key thing here is that we are currently working with the presidency on completing the bill that was published during the last administration, but that's currently work that's undergoing in that regard. There was a question around material irregularities posed to the Accounting Standards Board, and I'm sure Janine would come in as well. But I think key to this is that this is part of the enhanced mandate given to the Auditor General under the Public Audit Act. And this is really an instrument used to enhance the accountability ecosystem and to ensure that corrective action is taken. What I can indicate is that both the PFMA as well as the Treasury regulations are quite clear that all losses or all debtors must be recovered, irrespective of the value. So, from a legislation perspective, the law prescribes that. Where the Auditor General will come in is if there's persistent non-compliance with the law, as well as material losses to the state, they can issue a certificate of debt to accounting officers if they do not then proceed with the recovery of those debt. So currently, both the law, the current PFMA, as well as the Enhanced Public Audit Act, really promotes the recovery of all losses, irrespective of the value. There was a question around the revenue enhancement. Obviously, the Minister has spoken to it during the budget speech, as well as some of the discussions thereafter. This, I'm sure, between National Treasury and the South African Revenue Service, we would be quite happy to update the committee on. But I also do note that the SARS is on the program for tomorrow, and perhaps that question can also be posed to them. But this is something I'm sure both National Treasury and SARS will be quite open to provide updates to the committee on. The last question that I would respond to before handing to the Deputy Minister would be an update on the integrated financial management system. There's a few points I'd like to perhaps raise on this. Number one is that there is currently a legal review on the SRU report, which National Treasury has reported in the past, and that current legal review is currently underway. The second one is on the loss, which Honourable Van Rooyen also referred to, which the Auditor General has termed fruitless and wasteful expenditure. We're currently in discussions with the service provider. And one of the key areas of discussion is on how we can utilize the previous investment which National Treasury has made on the program to enable us to take the program forward. So that's a key part of the discussion because we want to ensure that we're able to demonstrate quite explicitly that there is value for money, and we're able to then move the program forward with that issue being resolved going forward. One of the key things is really the how do we take the program forward, and then I think we've agreed with the chair of the portfolio committee that we would come at some point to provide an update on this. The teams are currently working quite rigorously on this particular program. And you would see it as also as part of our strategic plan and annual performance plan targets that modernizing and automating our financial management system is a priority. And this is something that we will continue to do so. But we will definitely engage both the chair as well as the secretariat of the committee to provide an update on the proposed blueprint and roadmap on how IFMS will then follow through. With those responses, Deputy Minister, can I hand over to you? I know there was a particular question around debt stabilization. I'm not too sure whether you're happy to take that question from your side. Deputy Minister Sarupan, are you? Chair, I think we may have lost
I
the
was
Deputy
struggling
Minister.
with my mute button. Nothing to add. Apologies, Shabira. I was just struggling with the unmute button here.
Okay, if you are done, Treasury, can we move to ASB? Are you done, Treasury?
Yes, Honorable Chair.
Okay. ASB, can you respond to questions?
Yes,
Relevant.
thank you. And thank you for the questions. I'm really excited to answer these. It's not often that people are excited about accounting standards like we are, so thank you. Firstly, let me start with the environmental and social kind of reporting that happens at the moment. So the annual reporting guideline is something that's prepared by the National Treasury. We give input into the financial statement part of it. At the moment, there isn't anything specific on environmental and social reporting, but this is a developing area. It's something certainly that the International Public Sector Accounting Standards Board, who we look to when we develop accounting standards, is focusing on. At the moment, they are focusing on climate. Next could be biodiversity, but really anything within the realm of the UN SDGs is likely to be of relevance because, of course, that's what government reports on. We don't necessarily use the triple bottom line in the public sector just because that's more a private sector concept. So for us, we will really be having a look at how we link the financial statement information to what is being delivered by government and then specific metrics that will be defined as to certain pacts that we might sign or agreements that we might sign with other countries, like the Paris Climate Accord and all of these kinds of things. So in short, at the moment, there isn't anything. To the extent that there's any environmental or social impacts that have a financial risk, those would need to be disclosed in the financial statement. So for example, if you have a landfill site and you're a municipality, you would need to have a liability for that. You would have quite a bit of disclosure about the nature of this asset and liability, what all the factors are that you consider in coming up with a measure. If you have, for example, climate financing through a loan that you either receive or give, depending on which side you sit as an entity, you would have some disclosures about those. So these are the kinds of things that you would see in the financial statement. So financial risk related things would be in the financials. At the moment, no requirement to report outside of the financial statements. This is something that we are commenting on to the international body. We don't have a mandate yet to deal with that. And I say yet because we are hoping that our mandate will be expanded a little through the PFMA changes so that we can look a little broader than just the financial statements and really look across the board at the whole accountability cycle. And really what I would like to see is what we are spending our money on, how it's contributing to various things in the economy. And it could be additional risks that we are being exposed to as well. So if it's in the financial statements, that's us at the moment. And if there's any sort of other reporting outside of that, through the annual report guideline, not dealt with at the moment, but it is an emerging area and something that we are working with the Treasury with. In terms of Parliament being our biggest user and consumer, you are absolutely right about that. And we have over the years had members of the Standing Committee on Finance or SCOPA being members of the ASB board. It hasn't happened of late, but we would, of course, welcome an appointee from Parliament or from a legislature or from a municipal council to either serve directly on the board or to observe our work, or as an alternative for us to have engagements with you about particular standards that we are issuing, or just checking in about what your user needs are in terms of what you see or don't see in the financial statements and how we could improve that. So I'm happy to engage with the committee on how we can make that work. But yes, we would really be very excited about that. In terms of reporting during this sort of extraordinary period that we would call it while the budget is not approved. So the budget not being approved and all the complexity that goes with that is primarily driven from a legislative instrument, which would be the PFMA. And I think it would cascade down to the MFMA as well, because the municipalities are also affected. There's nothing to preclude entities from providing as much disclosure as they think is necessary for users to sort of understand what spending happened during this period, what controls were in place, etc. So it's not prohibited, but I think if this is something that the committee would like to see, then perhaps we can work with our colleagues at the Office of the Accountant General, to sort of explain that this might be of use to users of the financial statements, not just for Parliament and yourselves as a committee, but perhaps to the broader citizenry. So happy to do that. On the performance management system, in terms of, there's two things. So the one is adoption of GRAP accounting standards as a reporting framework. So there's two reporting frameworks that are currently available for entities to apply. The first one is the modified cash standard, which is issued by the National Treasury. And the second one is the standards of GRAP that's issued by us. The Minister of Finance determines which entities apply which framework, and all entities apply GRAP besides the national and provincial departments who provide the modified cash standard. So it's the next step that's required from the ministry to say, look, we need to make the standards of GRAP applicable for national and provincial departments. It is a change from a modified cash basis of accounting to a full accrual system. So there are, of course, complexities in that. And I think Shabira has just touched on one of them, which is the IFMS, of course. When you change accounting standards, you need to think about the people that are going to be implementing this. You're going to have to think about the policies and processes that need to change. And then, of course, you need to think about the technology and sort of the overall structure of the organizations and whether or not they are able to support a full change to accrual accounting. So it is a big move. And of course, something like the IFMS is taking us a step closer, but there are other things that need to be done as well in terms of people and processes. But this is something that the minister will need to approve. The other question that was asked about not adopting individual standards of GRAP, and most entities adopt the individual standards. That's really not an issue. Of course, if you don't apply the standard, you say so. But that's very rare for us. Entities seldom make a decision not to apply our standards. I think there is one exception, which is, with the court at the moment. But that's more from an audit issue rather than an accounting. Well, it is an accounting issue, but I think it's also that the auditors were unhappy about the accounting standards and how they were applied. And that's, as I said before, the courts at this moment in time. In terms of our project on the education material for users of the financial statements, so this is something we have already started. We started the project already on 1 April. We have contracted it out to a team of experts to try and really make this simple, approachable, understandable, so that if your sort of grandmother or your brother or your sister or your uncle asks you what financial statements are about and what they mean, that this will really provide a good set of information about that. It will be made available electronically. So as you sit in Parliament now or in the committee, you would be able to go onto an app that would essentially give you information about what the various line items mean in the financial statements and then how they link to the financial statements. So we are making progress with that, and we plan to have it done by the end of the year. By the end of the year, I mean the end of the financial year, so 31 March 2026. Our plan is to see how we can then develop that further. We do want to make it as accessible as possible, so perhaps translating it into other languages might again make it easy, because it's meant to be for a broad citizen base who, of course, do not use English as their first language. So that might be phase 2 and 3 that we need to think about, but we have already started that. For education per se, so we are not going to offer a training program. As I said, it's really trying to make our work more accessible and understandable. So formal training programs, we continue to engage with universities and others about the importance of the public sector, as well as public sector financial statements, financial reporting, etc. So, for example, the CA program does include public sector in it. The difficulty is that they need to sort of manage everything that they have in the curriculum, and public sector is quite a small part of that. But I think what they are acknowledging at universities is that you don't need to teach public sector, or you don't need to teach banking. What you really need is skills and competencies of individuals to be able to adapt regardless of where they are. So it's not a case of having standards of GRAP taught, but really how to, if I have to engage with standards of GRAP or another reporting framework, how would I be able to do that? We also have established a research forum a couple of years ago where we are continuously engaging with academics to see what kind of research we can do in the public sector as well, so that we can have academia more involved in developing and sort of being thought leaders in public finance within South Africa. The other question was on the graduate development program. So at the moment, we don't have a graduate development program just because we are quite small. Our team is only 7 at the moment. We do have a young lady that's sort of working towards a professional designation. And we do try and make sure that we develop our people as far as possible. But in terms of increasing the pipeline, I think this is something that we can speak to the Office of the Accountant General about, in terms of whether or not we can participate in their graduate development program in any way, shape, or form. I do think that there would be opportunities for young people to come and work for us at moments in time, or albeit a specialized industry or a specialized entity that we work within. I do think that there are good skills that we would be able to impart to others. I think I've covered sustainability. Yep. And then the material irregularities, I think Shabir has covered that. I think just to say that the material irregularities part focuses a little more on the control environment and not just the financial statements per se. So I think the material irregularity part is sort of elevated to look at the broader PFM ecosystem rather than just focusing on the financial statements. I think I've covered everything, but if I haven't, please let me know and I will do so. Thank you.
Thank you. Next is the Ombud Council.
Chair, can you hear me? I did not note any questions for the Ombud Council, but should any arise, I would be happy to take them.
Okay. Let's proceed with our program. move to the next stakeholder or the next entity, that is the pension funds adjudicator. I see the hand of Honorable Van Rooyen. Honorable Van Rooyen.
Thank you, Chair. I just wanted to check if National Treasury will still respond to the question of the debt management strategy, because they never responded to that.
DG, I heard you referring that question to the Deputy Minister, and it's like he didn't respond to it. So Honorable Van Rooyen wants the question to be responded to. DDG Finance, Mr. Shabir.
Thank you, Chairperson. Chair, we will be happy to respond to that question in writing. The DDG for the Budget Office is not here. So it is a bit of a technical response, and we would be happy to respond to that particular question in writing if that's okay with the committee.
Okay, that's okay. How long will it take you to respond to that question? Today is Tuesday.
Chair, by latest next week, Monday, if that's okay.
Okay. Secretariat, can you please note that the question on debt management, the response will be received the latest next week, Monday. Honorable Squad. Honorable Squad.
Thanks, Chair. Chair, just on the issue of maintenance, because I'm really not satisfied with the answer. Perhaps if it might also come in writing, because if, for instance, you refer to allocations that are made to health, for instance, it's a revitalization program, it's something else. It's not really maintenance in the real sense of the word. It's something else because it has got various components within that hospital revitalization and so on and so on. If you look at the primary health care and so on, I mean, we can go on and on, because I think the only area where it's clearly visible and you can therefore be able to follow it up, it's in terms of the provincial allocations to road maintenance grant. So the rest, Chair, I think we rather revisit it. Perhaps if it can come in writing, I would really be happy. Thanks.
Thanks, Honorable Scott. DDG, can you respond to that also in writing, as you will do so with the question on debt management?
Noted, Honorable Chair. Will do so.
Okay. Let's move to the next entity, pension funds adjudicator. 20 minutes, over to you.
Good morning, Chairperson and members of the committee. It seems as if I have an issue sharing my screen. I don't know if the Secretariat can help me from their side to just put up the presentation. Secretariat. Okay, thank you. I'm Mubangulu Kaimani, the pension funds adjudicator, and with me is the executive head corporate services, Bulelani Makunga, who will take care of the remaining section of the presentation. If you can then move the slides for me to the next one. Thank you. So I'll go right up to slide number 23, Chairperson, and then the Executive Head Corporate Services will handle slide 24 right up to the end. If I can just start with the background, the Office of the Pension Funds Adjudicator is one of the statutory Ombud schemes, and it was founded in 1998, and our mandate is to resolve pension fund-related complaints in a procedurally fair, economical, and expeditious manner. We provide a free service to members of the public, and our determinations are at the same level as a High Court order. However, we do not have jurisdiction over all retirement funds. We only have jurisdiction over retirement funds that are registered in terms of the Pension Funds Act. That then excludes the Government Employees Pension Fund, Transnet Pension Fund, the Post Office Pension Fund, and the Associated Institutions Pension Fund. We also have other jurisdiction limitations, and I think the most prominent one is prescription, in that it does have quite a bit of impact on members. So we can only entertain complaints where the cause of action arose within the 3-year time limit to the time that the matter was lodged with us. Also, if a fund goes under liquidation, we cannot involve ourselves in that. Also, if an employer is undergoing business rescue, then we will be excluded from jurisdiction. Matters that are already pending or finalized in any court of law, we wouldn't have jurisdiction over those. And of course, complaints relating to the apportionment of Section 15B surplus. One of the other things that is a limitation on us is that we do not enforce our own orders, but then that is also because our orders are like High Court orders. Same, the High Court doesn't enforce its own orders, but the enforcement is subject to the sheriff and his processes. In terms of our governance, we are a PFMA Schedule 3A public entity, with the Pension Funds Adjudicator being the accounting authority for PFMA purposes. And because of the straddle between the PFMA and the Pension Funds Act, the Executive Head Corporate Services is then delegated as the accounting officer. The accounting authority, which is the adjudicator, is assisted by 4 governance committees thus far. We've got an audit committee, a risk committee, a remuneration committee, and a social and ethics subcommittee. However, we are in the process of rationalizing the committees. So we are combining the audit and risk to be one committee, so that also for an entity our size, we can manage all the aspects that go into the preparations and reporting in terms of those committees. As the Ombud Council has already stated, they are the regulator for us also. We are in the infancy stages with them, and so we are having other teething problems there, but it's not something that cannot be handled. That is our organizational structure, indicating the 3 ESCO members, the Pension Funds Adjudicator, the Deputy, and the Executive Head of Corporate Services. We currently have a staff complement of 83, and we also quite frequently or on an ongoing basis make use of interns. Currently, we have 9 interns. We maintain about 4 also in terms of our core business, because just like all the other Ombud schemes, we don't find ready-made lawyers out there that can handle pension fund complaints. Therefore, we make use of internal training to make sure that there is ongoing training and we can have a feeder into at least our entry positions. Next slide. As indicated, in terms of our external environment, we are we are busy with the financial ombud system review. And as you saw, this office is more long-term because of the technical nature and the way that it is structured in terms of how it then gets amalgamated, or how it then gets considered in terms of the new system. Also, our funding model has changed. Now we have to raise levies ourselves, and that comes with its own governance requirements that we have managed to successfully navigate over the first year, and we are in the second year of that revised model of funding. We also patiently await the enactment of the COVID bill, because it does have quite significant amendments to this office's mandate that will allow us to be more efficient and also improve on the kind of relief that we are able to give to members of the public. We also make use of the conduct standards of the FSCA. So we follow those developments a lot to sort of see how those impact on members. POPIA did have an impact on us in that we had to do quite a bit of work with the funds to indicate that they cannot withhold certain information to our investigative processes. But I think with the communication that we have been able to put out there, funds now understand where their limit is. The two-pot retirement system had quite an impact on the number of complaints that we received. With it in the previous year, since it came in September, our caseload in that year, 60% of that happened after the implementation of the two-pot retirement system, where we were averaging about 950 complaints per month. Now we are consistently averaging 1,200 odd complaints a month. If we can move to the next slide. That then shows you our office statistics over a 10-year period. With the previous year, we had 10,331 complaints received. So we are back to pre-COVID levels. Next slide. Thank you. This slide just indicates how we have had to shift also our focus in terms of how we receive complaints. If you look at the first year there of 2015, it indicates letters being the highest form that we receive complaints in, and travel forward to 2024. Now we have our website being the highest at 4,350. So you can see how at least digitization has assisted us to reach more members and be more efficient. Next slide. Complaints finalized. Last year we finalized 10,100 complaints across all complaint categories. And if you can just have a look at the next slide. What is of concern to us is this slide, which is the finalization type. It indicates that more than half our complaints are finalized by way of determinations, but it's the nature of the complaints that we are receiving, because these are compliance-related complaints where funds are not paying contributions. There's no room for settlement because it is clear what the complainant is owed, and the complainant must be paid what they are owed without any deductions or limitations. But it most certainly indicates to a very low compliance culture within funds and employers that participate in them, which is illustrated by the next slide. If you look at the next slide, it indicates to us that about 80% of our complaints are Section 13A compliance or withdrawal benefits. And these most certainly have to do with employers not paying complaints. The Section 13A compliance one that are almost at 45%, those are straightforward, employers didn't pay contributions. But the withdrawal benefit ones that are at about 38%, this is where the complainant initially starts off by asking a question of my withdrawal benefit has been delayed. And when we look into the issue, then we discover that it is because the employer has failed to pay the full contributions. Next slide. Thank you. The nature of the complaints that are related to the employer non-payment is where employers fail to register themselves as participating employers in a fund where they are supposed to. Also, employers may register later than the required date. They also fail to register employees and as members. They register employees later than the period that they were supposed to. They register the employees, but they fail to pay contributions, or they do pay contributions, but they pay less than what they are deducting from the members. This, of course, affects the fund credit in terms of withdrawal or retirement benefits. But in terms of disability, funeral benefits, and death benefits, this is where, because the non-payment of contributions result in the premiums for those benefits not being paid, the recovery, even if the contributions are recovered, the insurers will not step in because at the point that the claim was made, the contributions were outstanding. Next slide. In terms of two-pot complaints received, we did a sort of a segregation between complaints received and inquiries. So since the implementation, we have had about 400 odd complaints, if I talk right up to the period that we are in now. But up to March 2025, it was only 239 complaints. And as you can see on the next slide, most of the complaints and queries related to people wanting to find out their payment status, what the withdrawal procedure was. People were mostly thinking about or mostly inquiring about the delay in the payment. Also, at that point, many funds were asking members to update their personal details, and that then tended to delay their payments, and right up to just general two-pot inquiries. The inquiries were quite a lot, but they didn't result in complaints. So the previous slide does indicate to you that we had about 400 odd complaints, but in terms of inquiries, there were quite a lot of inquiries with people coming to our office because maybe in some instances they were not getting the kind of information that they required from the funds. Next slide. In terms of Section 13A non-compliance, these are just the top 10 funds that our office have dealt with. As you can, the highest number of complaints relating to employers not paying relates to the private security sector provident fund, then the contract cleaning National Provident Fund, then the transport sector one. Then the next lot of funds from number 4 are actually your industry umbrella funds. So those are most of the big insurers run commercial umbrella funds, and they also contribute in terms of Section 13A non-compliance. And I think with Alexander Forbes being the biggest administrator, it is not surprising that then they come up 4th in terms of employers participating in their funds that are not paying funds, are not paying over contributions. Next slide. Then this one is just for information to say in terms of those private security sector, which are the top 10 employers that are not paying. And if we can just move on to the next slide, this one was just for information purposes. Then the other issue that came up really was the issue about municipalities also not paying over contributions. And these are also the top 10 municipalities in terms of non-payment of contributions, right? From the Mamusa local municipality right down to the city of Matlosana municipality. And these ones, I think, together with the FSCA and the AG's office, we are looking into alternative ways of trying to have municipalities comply with the payment of contributions. In terms of observations, these are not only limited to municipalities, but it's observations in general. There are poor retirement outcomes in terms of what members in the funds are getting. Part of what causes that is fees that are being charged either on investments or on risk benefits, or also on the management of the fund itself. People are not staying long enough invested. There are quite a slew of governance issues related to funds, and also the non-compliance of funds with what the regulator requires. All this is resulting in really poor retirement outcomes for members. I'll then hand over to the Executive Head Corporate Services, Mr. Bulelani Makunga, to continue and complete the presentation. Thank you very much, Chairperson.
Thank you, Chair. So I'm still struggling with the camera, so from my end, I'm just going to talk to the audit outcomes and also speak to some of the stakeholder management outcomes that we've had recently, and then go to the strategic plan and performance plan. So this has been the audit outcomes for the past 10 years. Which really reassures the committee of our commitment to clean administration and good governance. We've had 7 clean audits over the past 10 years, and that has really has indicated that a reinforcement of our commitment to clean governance. You can go to the next slide for me. In terms of stakeholder management, so we do this at least once every 3 years, where we look at both external stakeholders and also our employees, as we always seek to drive a high performance culture that is people-centered, and it also obviously informs the quality of the service that we provide for our constituency, mainly our complainants and the industry. So in the most recent one, from an external stakeholder point of view, which was 2023-2024, we had 84% stakeholder satisfaction, which is way above the industry average of 60%. And in terms of employee satisfaction, with the recent survey that we did for the year under review, we had 79% employee satisfaction and engagement. Thank you. So both the external environment and the internal environment then informs our strategic plan for the next 5 years. So this is our mission as the OPFA, which has been reworked to impartially, transparently, and efficiently resolve retirement fund related disputes and ensuring there's just outcomes for all stakeholders. And also our vision is to earn the respect and trust of both the complainants and the industry and other stakeholders, obviously in the value chain, and improve access for the office of the adjudicator. Our values, integrity, professionalism, excellence, and respect, which really speaks to the credibility and the need for us to appreciate that our work really depends on the credibility and the reputation of the organization. Also with the partnerships that are very important for us to be able to do the work that we do. So our strategic intent is to build trust and improve accessibility of this alternative dispute resolution mechanism in the retirement fund sector by ensuring that all the stakeholders experience a transparent, impartial, and efficient adjudication. And we have 3 programs, which one is the disposal of complaints that are received in terms of the act that speaks to the core mandate of the OPFA, and the program that speaks to the need for us to achieve operational excellence in the work that we do, and the very important effective stakeholder engagement that includes consumer education and the outreach programs that we'd have to do. Next slide. So Chair, you can read the slide bottom up. So our strategic priorities for the next 5 years, we've identified 4 strategic priorities that aligned to the 3 programs that we have and aligned to the government priorities, which one mainly speaks to achieving excellence in the disposal of complaints, using or leveraging advanced technologies and optimizing our processes. The second one is to create awareness about the OPFA's mandates and also improve the visibility and accessibility of the office, and also position the OPFA as an employer of choice and continue and maintain a clean administration and strengthen our commitment to good governance. Yep, if you can go to the next slide, please. So the next 2 slides really is just a detailed share of the key performance measures that we have for the next 5 years, with the main focus on the first outcome regarding the disposal of complaints, where with the 7 indicators that we have, they mainly speak to the requirements of the service standards that we have in the organization, because the work that we do is really about good service and service delivery. And also we do measure as well the procedural fairness, which is the number of appeals that would have been registered for the decisions that were made by the adjudicator. So I'm not going to go into the detail for the sake of time, but in the main, the first 7 indicators really speak to the core mandate of the organization. And we also, I appreciate the need to continuously improve our processes internally. Hence, there's been a relatively improved investment in our ICT investments, and also in ensuring that our processes are continuously reviewed and improved. As part of the strategy chain, the focus area as well for the next 5 years is to improve access or accessibility of the office. So we're only situated in Pretoria, and we do receive walk-in complaints, which is still a big chunk of the number of complaints that we received, as with the slide that was shown earlier by the adjudicator. So we're looking to establish now a number of access points across the country so that we are accessible for those that want to come to our offices, and also strengthen the implementation of the stakeholder engagement activities that we have as an organization. And we'll continuously measure our impact as an office and use the outcome of those surveys to improve the way we do our work and the impact that the organization seeks to obtain. Thank you. Next slide. So in the next slide here, again, we speak to, I think some of the issues have been raised as well by the other members and the other Ombud schemes around attracting specialized skills. So we also have that problem, and also issues around retaining as well the skills that we have, which is the professional skill that we have, especially considering the war for talent. And unfortunately, we build the talent that we have, and others are ready to pouch them after that 3 or 4 year period where they trained and they are now ready to really add an impact. So unfortunately, that's a challenge that we continue to experience as an office. Also, Chair, I think as the last outcome around maintaining clean administration, we want to continue and obtaining unqualified audit opinions from the Auditor General, and also ensuring that all our invoices are paid within 30 days. Thank you. And then in terms of the resource plan, really these are the inputs to our business, Chair. Limited as they are, we try as much as we can to play around with the combinations so that we can optimize them. In terms of the...
Mr. Makumba, how far are you with your slides? Remember,
this is the last one, Chair.
It's allocated 20 minutes. You have gone beyond 20 minutes.
Oh, yes, I thought it was 2 minutes. Okay, no apologies, Chair. This is the last slide. This is the last slide, Chair. So in terms of financial capital, our budget is 113 million. We also funded through levies, Chair, like the other Ombud schemes. And I think I'd leave it there for the sake of time. Thank you, Chair.
Okay, thank you, PFA. The next entity, Financial Intelligence Center, FIC, 20 minutes.
Good afternoon, Honorable Chair and members, Deputy Minister. I will quickly try to share the presentation. Can I just confirm that it's on screen on your side? Mr. Chair, can Mr. Chair, is the presentation visible on your screen? I'll keep in mind and see the presentation, Mr. Chair. I'll quickly cover the background information on the FLC throughout the functions and then spend some time on the strategic plan and the annual performance plan for the coming year. And we'll speak a bit about what we expect to implement in the future.
FIC, hello. You have got the challenge of an echo. I don't know whether I'm the only one who's experiencing that. The sound is not that good.
I'm sorry, Mr. Chair, I didn't hear that on my side. I'm in a closed office. I'm trying to speak closer to the microphone. Is that all?
Yeah, Chair, there's a problem here. We can't hear.
Echo and the quality of sound is not that good. Can you do something about it?
I think maybe there's a possibility that he's got another device not far that is also tuned into the same telephone call.
Colleagues, I'm in a closed office, so I don't have anyone with the device.
Let's do like this. FIC, please sort out the sound. We can hardly hear you. In the meantime, we'll take your colleague from FSCA while you will communicate with Alan as soon as the sound is okay. And we'll...
That's fine. Thank you, Mr. Chair.
Sure. FSCA, are you ready? While FIC is sorting the issue of the sound.
We are here, Chair. Happy to share the screen. I'll wait for them to remove the presentation.
Can you please flight the presentation?
We are trying to do that, Chair.
Alan Butler, what's the challenge on your side?
Chair Nati is co-host, so you should be able to share screen. Unati, I'll share from my end. Oh, there you go. It's fine. Can you confirm if you can see the presentation?
Yes, we can see your presentation. Please proceed and time
All right.
yourself 20 minutes.
Thank you very much. Thank you very much, Chair, and good afternoon, honorable members and colleagues. I'm going to go through these slides. I do have colleagues of mine on the call who will help with questions later as well. I've got Deputy Commissioner Astrid Ludin, Deputy Commissioner Fazana Badat, and Rami Mpiti, who's our CRO. I'm going to go through the key slides to try and save time. So I won't go through all the slides, but the honorable members can ask questions, obviously, on the entire presentation pack and on other aspects of our work as well. So if we can start on slide 4. So this slide is quite helpful just to contextualize the role of the FSCA, just to situate our work within the broader Twin Peaks regulatory architecture in South Africa. There are 3 principal components of our mandate as articulated and outlined here. The first is about integrity and efficiency of financial markets. I see we wrote financial system here. This is about financial markets, the work that we do. And mainly here, this role is about the conduct issues in securities markets, listed or unlisted markets, the oversight responsibilities that we have over financial markets infrastructures, so exchanges, CSDs, trade repositories, associated clearing houses, central clearing counterparties, and so on. And that role is principally carried out through the Financial Markets Act. And then, of course, the surveillance work that we do through the Directorate for Market Abuse. So that's the first component around market integrity and efficiency. The second component of the work is about overall financial customer protection. And the emphasis there is the promotion of the fair treatment of financial customers by licensed financial institutions. And again, here we do this by both having in place a regulatory framework that articulates what the expectations are on financial institutions around treating their customers, and of course, the supervisory work that the supervision teams carry out to test what the outcomes are in the various interactions between customers and financial institutions. Very linked to that is the responsibility that we have around the provision of financial education programs, the work that we have in promoting financial literacy. And we do this directly ourselves, but also, as will be clear later, we also do that in partnerships with the sector and other players as well. So that's the mainstay of the mandate of the FSCA. We also have a responsibility to assist in maintaining financial stability. We do that both in terms of our own actions when we take regulatory action, to be mindful of the impact of those actions on financial stability, but we also are required to participate and assist the SARB in the interagency coordination mechanism called the Financial Stability Oversight Committee, FSOC, as indicated on this slide. Very importantly, the role of the Financial Services Tribunal, which is an independent appeals body to review our decisions. Some of the powers that they have are to review decisions and to send them back to us or to replace them, depending on what the case is. Depending on what the case that they are looking at. So it's a very, very important recourse mechanism for the regulated sector. So that's this slide 4. Slide 5. I won't spend a lot of time on this slide, Chair, except to say that it is a summary of our vision and our mission, and it's based on our founding legislation.
as I've indicated in terms of what our mandate is. And we also spent quite a bit of time as the leadership of the FSCA developing a set of values that will drive and anchor our work as we interact with the various stakeholders, licensed entities, and other people interested in our work, and certainly in terms of how we work together as colleagues, to be agile, to be collaborative, to be mindful of sustainability, integrity and accountability being key given the nature of our work, and excellence in the work that we do. So that's what we capture in this slide, slide 5. And then in terms of the scope of regulated financial institutions that are within our purview as a conduct regulator, it is as outlined on this slide, more or less the same with the types of entities that the Prudential Authority is responsible for, except that in material ways we differ, such as in terms of retirement funds. For retirement funds, we are responsible for the Pension Funds Act, so their registration, but we are also responsible for prudential aspects pertaining to retirement funds. It is similar in terms of collective investment schemes as well, and we are working together with the PA throughout this transition to make sure that these two types of entities can also fit into the Twin Peaks framework, where prudential oversight of retirement funds and CISs moves to the PA, and we retain only the conduct aspects of that work. It is the same as well with the more than 12,000 financial services providers. They are licensed in terms of the FAIS legislation, and they are overseen and supervised by the FSCA. And of course, many of them also have to get authorizations and licenses through other financial sector laws. And then, of course, they will relate to the PA, as the case may be, depending on what type of underlying trading activity that they do. Crypto asset service providers, a new addition to the list in terms of the scope. They are also licensed for various categories that are provided for in the FAIS legislation. Again, the focus here being consumer protection and oversight, as opposed to the other frameworks, which are still very much in gestation around sort of payments and prudential issues. But this is the sort of scope and types of entities that are within the purview of the Financial Sector Conduct Authority. In terms of the organizational structure, and I think, Chair, we have presented on this in our previous iteration with the committee. The Commissioner and Deputy Commissioners make up the Executive Committee of the FSCA in terms of the law. We are ably assisted by 11 divisions, divisional executives, as we style them, to carry out and execute the work and the strategy of the organization. The total staff complement as at end of April was 681. Important to just note that that number will change as we get to be embracing emerging areas, including crypto asset service providers, some of the services around credit, some of the work conduct issues around payments, and so on, which requires to have dedicated resources and a focus as an organization in regulating those from a conduct perspective. Another important overlay that's not included here are the governance committees that we have that oversee the work of the organization from a governance perspective. We've got an audit committee, we've got a risk committee, we've got a remuneration committee, and we've got a social and ethics committee as well. So that's of the FSCA. Happy to take any questions that people might have later. All right. So now moving on to our strategy, the strategic plan of the organization for 2025-2030. We maintain 5 strategic objectives of strategy focus areas, as some may call them. And the first one to talk to here relates to how we intend to improve industry practices to achieve fair outcomes for financial customers. And we really intend to further enhance our regulatory frameworks in this area by developing additional conduct standards that we will issue. And these will include a conduct standard on industry practices and the treatment of lost accounts and unclaimed benefits. This is an important area. We have published a paper in 2022. We've engaged the public on some of the challenges pertaining to lost accounts and unclaimed benefits. And we want to focus quite a piece of work to make sure that financial institutions have a reporting framework that is clear what the obligations are on themselves when they deal with lost accounts and unclaimed benefits, because we found that there's very disparate kind of practices across the sector when it comes to this. Another area of focus is culture and governance. Culture and governance are very, very important for conduct outcomes in financial institutions, and we want to formalize in a joint standard together with the Prudential Authority requirements and expectations around this area that is so important of culture and governance. We'll continue the work to strengthen awareness and implementation of TCF principles. TCF principles are sort of the bedrock for our supervisory framework. They are the basis of engagement when we go into an institution and test its processes, its claims handling, its culture around treating customers, including vulnerable customers. The basis is treating customers fairly. We already have some conduct standards that are based on this, such as the conduct standard on banking. So that's the focus. That's the focus that we will have in terms of our strategic focus area 1. And then the second focus area is acting against misconduct to support the integrity and build confidence in the financial sector. And we will do this by increasing the visibility of our enforcement actions because we have seen that this is a very effective strategy for deterrence. There are many players. It's not always possible, given limited resources, to reach everyone. But if you are able to detect a few that are impactful harms and you address those, then you can use that as a sort of the deterrence effect is much more positive throughout the sector. We are also needing to build capacity to improve oversight of some of the new emerging areas that I was talking to earlier, including crypto payments, services related to credit and FMIs. So that's we're going to focus on in terms of this strategy focus area. The third area, very importantly, talks to our strategy to support innovation, inclusion, and a sustainable financial system. And here, really the mainstay of the work is driven by the IFWG. The IFWG is the Intergovernmental FinTech Working Group, where we and the SARB and Competition Commission and SARS and others will come together, and we anticipate that there will be a need for regulatory interventions and a response for innovation. And we also run an innovation hub that provides an opportunity for us to give regulatory guidance for new ideas, but also provide a sandbox to test those new ideas and have that iterative process that enables a new idea to basically benefit from a more tailored regulatory framework that enables it to succeed. So we will continue to participate there, to put resources to assist as we must. And we will also continue to research and monitor access and usage of financial products. This is very important around the strategy of financial inclusion, that we are, for a long time, we've been focusing on access, and access is good and access has improved, but we now want to focus on usage of financial products and services, because we think that's where and that's how financial products and financial services provide greater value to financial customers when we are able to measure usage and not just access. And we will also deepen our collaboration with stakeholders to drive transformation. And this is the work around transformation. We have already been saying publicly that we want to be able to make a contribution to the availability of transformation data for the financial sector, to assist the conversation to measure the progress that's being made around transformation. COFI, of course, gives us a stronger role in terms of transformation outcomes in the financial sector, but we are not standing still waiting for that. We are already establishing collaborative partnerships with others. And the last one, sorry, the last one is the fifth one, and this is a more internally focusing strategic focus area, which really talks to the transformation of the FSCA in terms of our own efficiency and responsiveness. And we have embarked on a major digital transformation journey and strategy as an organization, and we are investing in the development of our own SupTech, supervisory technology system, the IRS, the integrated regulatory solution. And we are really hoping that through these investments, we will be able to enhance the kind of experience that supervised entities have with us, but also help us to be a much more data-led regulatory and supervisory authority, and become much more data-centric and insights-driven regulator. So that's a very exciting area internally within the organization, and that's really the long and short in terms of our strategy for 2025 to 2030. If I can then move, Chair, to the APP itself, just some of the key targets that we have. So in this year, we are aiming to publish and implement our 3-year regulation plan, and that's the plan that contains the regulatory instruments that we had outlined earlier in our strategy. It's a 3-year rolling plan, and our APP does indicate which of the regulatory frameworks pertain to this year, for example. We'll do the same in terms of our risk-based supervisory plan that we approve at the beginning of the year. It informs our interactions with financial institutions so that at the end of the year, we can be able to have seen all of those depending on their risk ratings, and be able to decide on regulatory and supervisory interventions as they are required. Importantly, also in terms of strategic objective 1 is the COFI bill process. The COFI bill is in the processing by the Treasury, but we are not standing still while Treasury is processing it. We are putting together implementation plans for this new legislation, given that we can anticipate what the impact of this bill is going to be to the business of the FSCA. So we are already investing quite a bit in the preparedness of the organization for the implementation of COFI. On the second strategic objective, our first target is the publication and the initial implementation of the market efficiency and integrity regulation plan. We also target the completion of the investigations and other enforcement cases that are underway within the agreed timeframes in the year. We've got internal SLCs around when investigations and cases that are open should be complete. And of course, we must take into account all the legal processes, including the need for us to give whoever is accused an opportunity to give us representations that we must consider before we finalize and take action. We will also, after those processes are done, we will be publishing our annual regulatory actions report, which we've published twice before. After that publication, we then have roadshows and engage around the country with the sector and other stakeholders on the regulatory actions report and what it shows in terms of areas of concern, where we're making inroads, where we need to do a little bit more, and so on. On the third strategic objective, we plan to publish a statistical report on the retirement fund sector, highlighting the issues pertaining to the sector, but also also including transformation data. This is sectoral transformation data, so of the funds themselves. We also have a specific target on conducting workshops and other engagements with smaller institutions. Those are aimed specifically at building capacity, their own regulatory capacity and compliance capacity, and enable us to further improve their own understanding of regulatory expectations, which we have been getting consistently positive feedback in terms of people attending those workshops. We will also be continuing our work around the implementation of our sustainable finance roadmap. We published this roadmap last year with sort of 5 elements in terms of our focus area. And the next area of focus now is going to be the application of the green finance taxonomy and us developing guidance in terms of ESG disclosures to mitigate the greenwashing and so on, and promote responsible investment practices. So this is an area of work that we are prioritizing for this year in terms of the work around sustainability. And lastly on this, as I've indicated earlier, is to continue the work that we're doing to support innovation through the IFWG Innovation Hub. And on the fourth strategic objective, we are intending to implement our financial education plan, which really encapsulates what our financial education programs are going to be for the year. It's a 3-year rolling plan, and it articulates what we're going to do in a particular year. And I really want to encourage also members of the committee to read that plan. I think it's very detailed and well to do in terms of talking to what those plans are. And it includes, of course, our annual financial literacy speech competition, which we partner all the 9 departments of basic education. We do it every year, and we start from lower and lower grades. We also have a collaboration with National Treasury, with some Ombuds and others to run a Money Smart Week, which will be running actually just soon as well. So all of that is outlined in our financial education plan. Monitoring and evaluation is a very central component of this in terms of the work that we do. We invest, we design these interventions, but we want to make sure that we measure impact so that we are able to better design interventions as we go forward. And I want to repeat in the last strategic objective, the focus here, so the digital transformation work, the investment in the integrated regulatory solution, as I indicated, internal improvements around service level commitments, just efficiency in the organization. We also have an employment equity plan, which we have done very well in meeting, and we still commit to maintaining those numbers and do even some more. And comms and engagement and interaction with various key stakeholders affected by our work will also continue in terms of this APP. Quickly on funding, this strategy and APP.
Hello, Commissioner. How many slides are you left with? Because you are running out. You have run out of time.
Chair, I can make this the last slide, and I'll take questions on the rest.
Yeah. Yes, please.
Thank you. So this is just in terms of our funding. The 23-24 was audited outcomes for that year. Gross revenue just over R1 billion. Most of that going to staff expenses, given the nature of our organization, and then ops just below R1 billion. And we ended the year with a surplus of 156. This current year, these numbers are still being audited by the AG and team, and we are forecasting a surplus of 202 million. We have completed our budget for the next year with a slightly lower top line in terms of revenue and ending up with a deficit of 25 million rand. But we're not very concerned about it. It's 2% of gross revenues. We do think that what happens during the year is that the base that we set against which we withdraw levies sometimes improves, and we are able to cover, so that we're at least at a balanced budget. But happy to have a further discussion with anyone who has a question on that. We had just included Coffee Bill, which I've spoken to, and the work that we've been doing around area contributions. This remains an issue, but we are making good progress, especially because of our collaborations with Treasury, SARS, and law enforcement, and of course the publication of defaulting employers. We see good progress around this, and we'll continue with this strategy. On the pension fund trustee toolkit,
Commissioner, just pause there. We have the presentation. We'll refer to it in asking questions and making comments, so that I'm fair to other presenters. Thanks very much, Commissioner. FIC, have you sorted the sound?
Let's see if that's better.
Hello. No, I'm not sure. Honorable members, can you hear him?
Yeah, it's still the same.
Oh, no, it's very blurred.
No. Let's take DBSA in the meantime. Alan and Wotle, continue to assist FIC with the sound. DBSA.
Good afternoon, Chair, Honourable Chair. Thank you very much and committee members, thank you very much for the opportunity to present the DBSA's strategic plan and a performance plan. My name is Martie Janse van Rensburg. I'm the interim chair, and I'm joined by the CEO, Boitumelo Mosako, Ms. Boitumelo Mosako, and Mr. Tweni Rampele. Ms. Mosako will do the presentation, and in the interest of time, I will hand over to her. Okay. Can you share the presentation, Tina?
Yes, we are sharing the presentation. Is it showing?
We can't see it.
Okay, we're quickly sorting it out, Chair. Okay, there we go.
We can see that, thank you.
Can you see it, Chair? Okay, just do the volume. Have you done the video? Can you see? Okay. Good afternoon, Chair of Committee, Dr. Masonganyeni, and the members. Can you hear me?
Yes.
Okay, great. Thank you. Thank you for the opportunity to present the corporate plan for the Development Bank of Southern Africa. I will firstly touch on the mandate. I know that I only have 20 minutes, so I will go through the presentation as quickly as possible, Chair and members. In terms of our mandate, we are, as a development finance institution, is to promote economic development growth, human and institutional capacity building for sustainable development projects and programs in the African continent. We did celebrate our 40-year anniversary in 2023, where we were celebrating 40 years of development progress. We are wholly owned by the South African government. However, we have operations in South Africa and the rest of sub-Saharan Africa. Our geographical mandate was extended in 2012, 2013, where before then we were operating mainly in the SADC region, but post the geographical mandate extension, we now operate in sub-Saharan Africa. We are externally rated because we do have, as a bank, we do have a JSE debt instrument program. We have a DMTN program, so we are rated by both Moody's and S&P. We are well governed. We have a history of clean audits. We are also AA rated by ADFI, which is the Association of African DFIs. We also have global accreditation to the Global Environmental Facility and the Green Climate Fund. These are funds that have been created to actually support and provide concessional funding for green and sustainable investments. And we have had the opportunity to be accredited and have access to various facilities that these funds have provided. I'm not going to go into a lot of detail there. Now, in terms of our main objects, I'm going to leave this slide. I think the members have gone through that slide. Now, the key slide here is to touch on our value chain. And as the DBSA, we operate along the infrastructure value chain. So we do not only finance like what a traditional DFI would then do. What we do is we plan infrastructure, we prepare infrastructure, we finance infrastructure, we build, and we maintain. What is unique to DBSA is the build and maintain value proposition that we offer. On the planning side, this is a service we mainly provide the under-resourced municipalities. DBSA, one of our biggest sectors is to support municipalities, and we categorize them as market 1, which is your metros, market 2, which is your secondary cities, and market 3, those are your under-resourced municipalities. So the services we provide there is usually, and these are technical services that we provide, where we support the municipalities with their bulk infrastructure plans, their assessments, and their infrastructure planning, so that they have robust business plans that they can present for access to their MEC grants. In this category as well, we also provide asset care programs and revenue enhancement. We have a detail of the support that we have provided to various municipalities. On the preparation side, that's where we do project preparation. It has been identified in the infrastructure space that project preparation plays a critical role in terms of getting projects to bankability and to also catalyze other funders when it comes to projects. This is an area that we focus on as well as the bank. The second thing that we do is also program development, where we know that as a DFI, we can't fund everything. So what we do is we then develop investment programs where other investors can participate in infrastructure projects. Just to mention a few, it's the IPP program that we have developed It's the One Border Post program that we have developed as well, which is currently at RFP stage. So those are just a few examples. In addition to that, there is the infrastructure fund that we developed together with Infrastructure South Africa and National Treasury, which currently today has a pipeline of more than 100 billion, and with BFI approvals of about 37 billion. Just to mention a few. I mean, if one looks at the IPP program, for instance, I mean, that program has generated investment in renewable energy of way above 250 billion. In addition to that, there are programs of self-generation programs that we've also developed for the bank. Just a few examples. We finance infrastructure. This is normal loans that we do. We provide equity finance as well. And on the build side, this is a service that we started quite a few years ago. And this service we provide to augment state capacity when it comes to infrastructure development. And as you are aware, as members, we've currently been tasked with the opportunity with the mandate to rebuild Parliament. That's just one of the flagship programs that I can mention, over and above the two big hospitals that we are doing in Limpopo. The last one, which is 5, where we maintain, this is where then we provide, because we are of the view that it's all good and well to build new, but it's critical that one takes care of what they have. And this is where we then provide maintenance improvements, refurbishments, and even facilities management services, so we can maintain what we have. The services we provide for 4 and 5, we do it through a network, through service providers following PFMA guidelines. In terms of our clients and our exposures, we have agreed with the National Treasury that 60% of our business will be in South Africa and 40% in the rest of Africa. Currently, in terms of the composition of our book, 70% is in South Africa and 30% is the rest of Africa. The sectors that we focus on, we are very intentional and deliberate, because we are of the view that infrastructure provides access. Infrastructure enables equality, and infrastructure drives economic growth. We focus on the 4 network sectors, that is energy, transport, water and sanitation, and ICT. And on the social infrastructure side, we focus on education, health, and human settlements. I'm not going to go through the slide that talks to our operating environment. I think we have touched on, the current geopolitics, the financial market volatility. So this element I am not going to focus on. We do have a picture of a strategy, but I'll go to this specific one. And this is what we call our strategy on a page. Last year, the board of the DBSA approved the decadal strategy, which is our 10-year plan as an institution. And what is the reason for a 10-year plan? Because infrastructure is a long-term game. It's critical for us that as an institution, we do not focus on what we achieve, for instance, in the next year or 3 years, but have a longer term view, because we are of the view that there are certain things that we need to do today that we will only see benefits at a later, at a later stage. Let me give an example. I mean, when you look at, developing a program, when one looks at, undertaking project preparation, these activities, take time. And we are of the view that having a longer term view to infrastructure is not only going to strengthen the growth of the bank, but it will also accelerate infrastructure development, not only in South Africa, but in the rest of the continent as well. Very clear on our vision: prosperous and integrated, resource-efficient region, free of poverty and dependency. And I think what is key to our mandate is to ensure that we really drive inclusive economic growth, and I will actually touch on that when we focus on our transformation targets. Our mission: we are advancing development impact, and we are implementing sustainable development solutions. What is underpinning all of this is our values. We have our values of shared vision, service orientation, integrity, high performance, and innovation. Our strategic goals are very, very clear in that as an institution, we need to be financially sustainable. As an institution, we are accelerating development impact. Internally, we need to be a future-fit DBSA, and we, achieve what we need to achieve through smart partnerships. Now, if I look at the strategic pillars, I've already touched on an inclusive economic recovery, looking at the rest of the continent, and that is also, that is mainly to drive regional integration, doing things differently. That talks to our innovation, having, an operationally excellent organization, and also ensuring that we drive a green growth economy, and ensure that, as South Africa and the rest of the continent, we participate in the green growth economy. For example, as part of our strategy, we are also, looking at we also looking at participating not only, in infrastructure development around critical minerals as well. Now, in terms of our strategy outcomes, we would like to, provide inclusive growth, as I had said, capable and strengthened municipalities, just transition, advanced regional integration. We cannot overemphasize the financial sustainability, sound governance, and that is something that we continue to drive as an institution to ensure that we have strong internal, we have strong governance by actually ensuring that we have effective internal control, environment, and a fit for purpose. Now, in terms of the strategic initiatives that we are driving, firstly, we have categorized them into what is going to create value, what's going to communicate value, and what is going to sustain value. Firstly, it's our just transition. This is where we are having various investment programs to drive a green growth and enhance sustainability sustainability as well. And within this category of initiatives, we are looking at investments, to expand our investments in renewable energy in line with the IRP of the country, and secondly, to also support self-generation transactions as well, support for biodiversity within the country. In terms of an integrated municipal approach, I did touch on this, that, previously what we have done as an organization was to provide, different, in terms of our value chain to one municipality, we would provide the technical assistance in terms of, doing a bulk infrastructure plan. For instance, to one, we would provide funding, to one, we would do project preparation, provide project preparation support. What we have decided as an institution to actually say, how do we transition an under-resourced municipality, from where they are, to actually become a vibrant economic hub. And this is an aspiration that we have, not only us going at it alone, but actually using the network of players within that municipality. So it is a concerted effort between between COGTA, DBSA, and the private sector, where we are saying we diagnose a municipality, and this is through what we call partner with a district. And this initiative, we have said it's willing coalitions, and currently we are supporting 8 of those districts that have come forward, for this support, where we go a deep dive diagnostic. We then go through what are we then assess, and then from then on we support with infrastructure plans. We also engage with the private sector in those municipalities where possible. We then develop interventions that talks to strengthening their capacity, and then ultimately we are working towards economic activity within that municipality. In terms of the
just maybe it looks like we're stuck on slide 11. I think you've spoken to slide 12, so some of the committee members are a bit stuck. So I think if you can just call out the slide number on which you are, then they will all follow you.
Okay. I just need to check which slide I'm on, sorry.
You on 12. You on slide 12. You were talking to the strategy on a page.
Yeah. It's slide 11. We are on 11. What are the members seeing?
Okay, now we're all aligned, so you can proceed.
Great.
Sorry,
Okay.
I just had notes in the chat.
Okay, no, sorry. Thank you, Chair. I'm not seeing.
And you are left with 5 minutes.
Okay. Then what I'll do, I will then go straight, Chair, to our targets. Let me just go straight to the targets, which is our balance scorecard for 2025-2026. It's slide 13. Okay. What is, as I had mentioned in terms of our key strategic goals, the first one being financial sustainability. In terms of our measures, we allocate 30% of our balance scorecard towards financial sustainability targets. Firstly, what we measure is our return on equity, cost to income ratio, and also value of total disbursements. If we look at, for instance, what we had targeted for the 24-2025 year, we're looking at 6%. And I didn't provide the numbers because we have listed instruments. We're currently finalizing our audited results, and as soon as we have completed that process, we will then launch the results. So we are in a closed period currently. So what is provided here is what we had agreed in terms of our 24-25. If you look at what this ROE then translates to from a profitability perspective, I mean, when we look at where our profits were last year, we were sitting at it was about 4.8. We were just over we were at 4.6 billion last year. And when you look at the increase in the ROE, in the return on equity, we are expecting to remain profitable over this period. Our cost to income ratio is currently at about 23%, and this is the rate that we now 25-26. We expecting it to increase to 25%, then 2026, 24, and then it picks up again. And the reason for that is here we actually, looking at strengthening our internal capacity as an institution as part of our fit for purpose. We currently undertaking an operating model review where we are revising our operating model, and we have a new structure that is gonna enable us to support the decadal strategy that I spoke to, that is going to drive our growth. We're also embarking on a digital transformation journey. This journey started a few years ago, and we are continuing where we going to firstly looking at digitizing our procurement processes. We have started building an e-procurement system that has some completed modules as well, and also working towards an integrated execution engine where we are expecting to provide better service to our customers. We've also identified 3 new processes that we're going to be focusing on, which talks to our development impact results, our project preparation, and also looking at our people's process as well. In terms of what we're targeting for jobs, and these are direct jobs, so it's actually counting at tier 1 level, which they'll probably be higher if we had to go to tier 2 and tier 3. On the infrastructure, value of infrastructure delivered, we are expecting to increase that to 6.2 billion, 6.8 billion, and going up to 7.5 billion. And this is an area that we are, expecting growth going forward. Earlier on, I touched on the integrated municipal approach for the under-resourced municipalities. And here we are specifically targeting infrastructure, that we will unlock from these initiatives, increasing from 500 to 900 over the 3 years. These are annual numbers. So cumulatively, it's actually an addition of all of them. To achieve a just transition, here we mobilize, as I had said in my earlier slide, that we mobilize green finance from our various funders. And here, this is a commitment that we make in terms of the green projects that we're going to be supporting, specifically from the green dedicated funds. In terms of empowerment support, I touched on this earlier on around transformation being key to our mandate. In terms of this transactions we support for Blake-owned entities, and this is on an increase in 10, 12, and 12 transactions. I would like to mention that what you find in the infrastructure space is that these projects are high value projects. And in terms of our operating model, we will be looking at expanding our origination of transactions for lower volume transactions in the infrastructure space. We are targeting 40% of total procurement over this 3-year period annually, going towards BEE suppliers. I touched on us being a future fit, being efficient and effective as an organization, and we have targets in that regard, where we're looking at automating key processes over the 3-year period, and we're targeting 4 every single year. Another thing that I touched on was around culture. developing a high performance accountability culture within the organization. We did develop a culture strategy that we will be implementing over this time, including measuring the impact of the culture initiatives that we will be implementing. As I said earlier as well, smart partnerships remain critical because we cannot go at this alone, but we ensure that we use our strength as an institution to convene partners across various sectors, across various spheres to achieve what we need to do. And here we are targeting a 4 mark in terms of our client and stakeholder survey. We've also included the governance and compliance targets. We are of the view that as a development finance institution, one needs to have good governance, and as governance also attracts money, so we also have included the governance and compliance targets. The next 2 slides just talk to development impact over the last few years, and then the last slide talks to the various risks that we are managing as part of this strategy that we are implementing, so that the committee has a view of the risks that the principal risks that we have identified. For every single one, I can confirm that there are systems and processes and controls in place to manage, but by their nature, you find that the residual risk.
Hello.
Thank you, Chair.
Okay. Thanks, DBSA, for the presentation. FIC. Alan, are we succeeding with the sound from the side of the FIC?
Good afternoon, Chair.
There we go.
Can I check again if this is better?
Yeah, it's much better.
Okay, thank you, Mr. Chair. My apologies for that. I'm glad we got this sorted out. Just by way of introduction, my name is Peter Smith. I'm one of the executive managers in the FIC. And at the moment, I'm the acting director and the accounting authority for the FIC. I'm going to switch off my camera if that is in order with you, Honourable Chair, just to prevent further challenges, and I will then share the presentation and run through that.
Okay. Proceed, you can.
Okay. If you can then see the presentation, then I will then move to the next slide. We will be covering a background on the FIC just by way of making sure everyone is on the same page as to what the FIC's roles and responsibilities are. We'll spend a bit of time on the 5-year strategic plan and the annual performance plan for the coming financial year. And at the end, I will spend a few minutes to look at the environment that we expect to encounter in the near future when we have to implement these plans. So in a nutshell, the FIC was established as a statutory body by an act of Parliament, the Financial Intelligence Centre, and we are required to administer this as part of our mandate, this legislation. The FIC started operating in 2002, and we started receiving our first reports from financial institutions in 2003. FIC is fully funded from the national budget, from the fiscus. In other words, we are allowed also to receive donor funding, which we've not made use of. And we have from time to time received funding from the CARA account as well. The mandate of the FIC in a broad view is to function as South Africa's national centre for the receiving and analysis of financial reports and producing financial intelligence. And the FIC is the only entity in terms of law that is mandated to perform this function. It's important to note that the FIC does not conduct investigations. In other words, we work with investigators, but we do not do the investigations ourselves. The legislative mandate for the FIC is to assist in the identification of proceeds of unlawful activities, and also hand in hand with that to identify persons that may be involved in money laundering or terror financing or the financing of the proliferation of weapons of mass destruction. We assist in combating money laundering, terror financing, proliferation financing, and we implement targeted financial sanctions that come out of the UN Security Council when the Security Council applies its resolutions. We play a role in the supervision of non-financial businesses mainly, and a small number of financial institutions, categories such as credit providers, and also more recently crypto asset service providers. And the most recent expansion of our mandate now also requires us to produce forensic evidence that may be used in legal proceedings, especially in criminal trials. When we do perform these functions, we are required by law to share our information with law enforcement agencies, with the National Prosecuting Authority, with supervisors such as the Prudential Authority and the Financial Services Conduct Authority, with the Intelligence Service, the Revenue Services, and other competent authorities that require our information to discharge their own mandates. The FIC has a full staff establishment of 325 positions. This was at the end of March this year. And of those, 275 were filled at the time. We only had 2 persons on a fixed-term contract, and we have a small graduate program of 4 graduates in a given intake of a 2-year cycle. We are currently, or at a point in March, we're at a staff composition of 63% female employees. The FIC is divided into 5 divisions to discharge this mandate, and each division is managed by an executive manager that then reports directly to the accounting authority in the director's office. At an operational level, the FIC gathers information from not just the information that's reported to the FIC, but also access that we have to a large number of data sources, both public and private data bases, some directly and some based on a subscription that we pay for to access information. When we produce financial intelligence, this is shared with competent authorities, and there's a long list of those listed in the FIC Act with whom we must share our information. These, as I said, include mainly law enforcement agencies, but also a number of other government entities that are required to make use of our information to achieve their own mandates. We monitor developments around us, especially international standards that may change and that may require changes in our own policy environment in South Africa, and provide the necessary advice. And we produce forensic evidence that identify the flows of funds or identify persons and connect them to property, which is then used in evidence in criminal trials or in asset forfeiture provisions. The financial sanctions that we implement relate to resolutions of the United Nations Security Council, where the Council from time to time make designations of persons and entities that then have to be implemented in national law of the various jurisdictions that are members of the United Nations system. And on the compliance level, we offer guidance to institutions on the compliance expectations, and we also supervise and enforce compliance with the requirements of the FSCA Act. So when we look at our strategic plan for the coming 5 years, we set ourselves 5 strategic outcomes, and these have been very stable outcomes that we've been working to over the previous cycles of strategic planning. But alongside, we've identified the outputs that we want to achieve if we work towards the production of these outcome areas. So the first relates to our role as in the supervision environment, ensure that not just the FIC, but other supervisors are effectively supervising compliance with the FIC Act. And then that the FIC produces useful financial intelligence for agencies to apply in their roles and mandates. to continuously monitor the environment around the FIC, mainly amendments in legislation, changes in international best practices, changes in international standards, and apply those in our domestic framework. And then to support the FIC as a well-functioning organization, maintain our corporate governance structures, and ensure that our operating model remains in line with what's expected and required of the FIC over the period. And the last, most recent objective is to implement the production of forensic evidence and to ensure the usage of the forensic evidence that the FIC is producing. Now, when we achieve these outcomes, the intermediate follow-up on effect of that we would like to see is that South Africa's legislative framework remains in line with international developments and best practices, that the guidance that the FIC provides and the enforcement actions that are taken lead to better compliance by private sector institutions, and in turn produces better information for the FIC to work with. In the criminal justice system, we aim to achieve a constant improvement in the financial investigations that we are undertaken by the support with our financial intelligence that we can deliver, and the forensic evidence that we can contribute to those investigations. And to maintain then the effective management of the FIC, both in terms of the projects for development that we implement, especially on the ICT front, and also the enhancement of the capacity that we have at our disposal in terms of human and financial resources. So to translate this into a bit more concrete target setting, in the outcome area relating to supervision, we've set ourselves 5 targets, outcome indicators. 3 of those on this slide, the 2 on the next slide. The first deals mainly with our understanding of the risk environment in the private sector, in the institutions that are subject to the FIC supervision. What we're aiming for is to be able to assess each sector that we supervise and identify the institutions down to individual level that are at the higher end of the risk spectrum and those that are at the lower end of the risk spectrum. And for this, we require a constant feed of information. We aim to have all new entrants into these sectors provide us with the required information we require, and a ramp up of the existing incumbents to achieve a target of 70% in the 5-year period. This has been a very focused process for the FIC to start collecting this information that we can assess and identify institutions that are at high risk. Here we are talking about the sectors such as the legal profession, estate agency profession, casinos, dealers in valuable items, and so forth. We then aim to use that information to identify how we should structure our outreach to the various sectors to improve their understanding of the FIC Act, their exposure to money laundering or potential money laundering and terror financing, and for them to know what to look out for and improve their reporting under the FIC Act to ourselves. And to drive that with both soft and hard supervision oversight activities in terms of compliance reviews that we would issue, where we advise institutions of improvements that they need to make, or where we carry out inspections on institutions to measure their level of compliance. And we've set ourselves certain targets to achieve over the 5-year period for that. Following the monitoring of the compliance, we then also set ourselves targets to taking enforcement action, and this is where the FIC has the authority to impose administrative sanctions on institutions that require them to take remedial actions, and to follow those up with future inspections, where we can then see and measure the improvement in compliance and the application of the remedial actions in those institutions. And where we are challenged in the administrative sanctions that we issue, we aim to maintain at least a 76% success rate in the successfully defending appeals and challenges against our sanctions in our courts. In the outcome area relating to production of financial intelligence, we've, over and above our normal day-to-day work, we've set ourselves 2 strategic targets. The first is to improve the usage of the financial intelligence that the FIC produces. Here we aim to achieve at least an 80% coverage of training that we'll aim to provide to the users of our financial intelligence, as I said earlier, mainly in the law enforcement area. And of those that have direct access to our information, to maintain at least a 70% coverage of training for those. Especially in the second area, we see a lot of turnover of the appointees in the law enforcement agencies that have access to our information, and this is a constant process for ourselves to maintain that level of coverage and ensure that they are well trained in the usage of our information. A further additional strategic target that we are aiming to achieve is increasing our production of strategic intelligence. And this is not intelligence that is used in ongoing day-to-day investigations, but more intelligence that identify changing trends. We've produced recently reports in partnership with financial institutions, especially the banking sector, on things such as wildlife trafficking, human trafficking, terrorist financing, and advising institutions of what trends and indicators to look out for in identifying those. And we aim to ramp that up significantly over the next 5 years. In the outcome area relating to the policy and legal environment, we aim to remain 100% responsive to new changes in policies and best practices, standards in legislation around us. And we expect quite a significant amount of development in this area in the next 5 years, where new legislation will have to be passed in South Africa, dealing with various aspects of strengthening our anti-money laundering system. This is sort of the follow-through effect of the grey listing by the FATF that I've heard mentioned earlier in some of the previous presentations as well. And in maintaining our operating model, ensuring our sustainability as an organization, we aim to maintain 100% rate of implementation of our projects that we bring to production, maintain our corporate governance structure over the 5-year period. And the area of the forensic evidence that we aim to produce, we set ourselves a target of being responsive to 100% of the requests that we would receive for us, the FIC, to become part of investigations and to produce our forensic evidence to be used in those investigations and as evidence in trial proceedings or asset forfeiture proceedings. Now, if we look at how we break this down more to day-to-day operations in our annual plans, again, if we cover the same effective outcomes, the strategic outcome areas, but here we've translated the targets more to the operational level that we will be aiming to achieve in a year. In the area of supervision, I set ourselves targets on the number of compliance and awareness initiatives, especially the increase in the information base that we will use as our risk assessment processes to identify those that should be earmarked for closer or more frequent inspections and supervision. And to maintain our success rate in applying administrative sanctions and seeing the remedial effect of those administrative sanctions, where institutions then have to take corrective actions once they've been sanctioned. In the area of production of financial intelligence, we've set ourselves here four indicators. The first two deal with our production of financial intelligence on our own initiative. In other words, where we have not been asked for information, but we're based on our own analysis work, we pick up matters that require investigation or where we believe further work needs to be done by authorities that receive the information from us. The high priority matters that we've identified here are the types of matters that are mainly investigated by the likes of the independent directorate in the NPA that was recently formed and the Hawks, or the Directorate for Priority Crime Investigation. So these are really the top end, high complex money laundering, financial crime, fraud, corruption type of matters where we expect to be involved in long investigations with defendants with deep pockets that can challenge those investigations, and where our information really has to stand up to the test to make those successful. Where we are being requested for information, that is the third target there, we have maintained a 100% response rate for a number of years now, and we aim to keep it at that level for the coming future in the next financial year. This is highly dependent on the capacity that the FIC have in terms of human resources to process these incoming requests, do the necessary searches, and analyze the information that needs to be produced on request by the financial investigators in the law enforcement agencies. We also aim to continue our contribution to projects on illicit financial flows. These are mainly projects that track cross-border flows where there might be either contraventions of exchange control measures or other illegal activity involved in the financial flows. And then in terms of the engagements with our counterparts, especially in the blocking of funds, this is something we often work with hand in hand with the asset forfeiture unit. We again aim to maintain a 100% response rate, which has been our target for the last few years. A new target for us there is again the production of the forensic evidence, and for the coming year we've set ourselves a target of producing at least 20 such reports that will be used in either asset forfeiture proceedings or in criminal trials. In the improvement of maintaining our financial integrity of our financial system, we've set ourselves a target there relating to supporting development assistance to neighboring countries, counterparts in the region in Southern Africa and East Africa, and we've in the past set ourselves a 100% response rate, which we aim to maintain in the coming year. And also our support and engagement in the policy making roles, mainly for the National Treasury, and the engagements with the Financial Action Task Force and the regional body which is called the Eastern and Southern Africa Anti-Money Laundering Group, maintain a full support for South Africa's involvement in those organizations. The targeted financial sanctions that are imposed by the UN Security Council, according to international standards, those have to be implemented within 24 hours of a designation being done by the Security Council. We've been able to maintain a 100% success rate of achieving the implementation within 24 hours, and we aim to maintain that also in the coming year. An additional target that we've added more recently is to also monitor the implementation of South Africa's anti-money laundering measures in terms of our policies, not just within the FIC, but in the broader anti-money laundering regime, and to advise on how we see risks changing and how we see areas where those policies might need to be adjusted in coming years. And this will also be why we are giving in this presentation a few thoughts on how we see things developing in the next 5-year rolling period. On the outcome 4, on the governance structure for the FIC, we aim to maintain the achievement of a clean audit with no findings. We've been able to do this in the past 2 years, and we set ourselves a target to keep it at that level. And in terms of our staffing, we aim to either meet or exceed the employment equity targets for female staff, for designated racial groups, and for people living with disabilities. The target on paying valid invoices, we aim to achieve 100%. We have been able to achieve that from time to time, but not always in every year. But that is the target that we are required to achieve and that we set for ourselves. In terms of our operations, because our operations are heavily driven by IT capability, we aim to achieve at least a 90% uptime across the duration of the financial year. Then, if we quickly take a short-term look into the future, South Africa has embarked on the implementation of a risk-based approach. We do risk assessments as a country, not as the FSCA in and of itself, on a cyclical basis, and we aim to continue contributing to that from the FSC side with providing robust information for the assessment of money laundering risk and to identify where money laundering or terror financing risk may be changing due to new influences. We can think of things like crypto assets, for instance, coming into our environment. And for us to then continue the advice provided also to policymakers and decision makers based on this assessment. Some of the key findings of the current cycle of risk assessment, this should not be news to people that are close to this environment, but it is some of the factors that affect us is that South Africa is a major financial center in our continent, which means we receive a lot of cross-border financial flows, both into and out of South Africa. That means our financial system is a gateway to the economies of countries around us, especially in the Eastern and Southern Africa region, and that exposes not just us, but also those countries to particular money laundering and terror financing risks that are linked to activity in South Africa. Some of the challenges that we deal with still is a prevalence of cash in our economy that allows for anonymity and difficulty in identifying and tracing the flow of funds. Major proceeds generating crimes remain corruption, bribery, that weaken also our control systems. And we find that the use of corporate vehicles such as companies and trusts to create a veil of secrecy of beneficial ownership, those who have interest in property or financial flows, is on the increase, and that is a challenge for financial investigators to make the links between the suspects and the property and the financial flows.
And you move towards conclusion, Mr. Smith.
Yes, certainly. This is the last slide, Mr. Chair. The last remaining challenge ahead of us is the next mutual valuation that is coming up. As we are now getting towards the end of the grey listing process, we are also now moving into a next cycle of mutual valuation where our anti-money laundering system will be tested again. And we expect that process to roll out over the period from 2026 with the adoption of the next report currently being scheduled for October 2027. So that will provide us with the opportunity actually to test a lot of the developments and improvements that were made over the current period while we were in this grey listing process. That is the end of my presentation. Thank you, Mr. Chair.
Thank you, FIC. We are done with the presentations. Now it's the opportunity for honorable members to engage. Honorable Beasley, Honorable Mazibuko, you are welcome. Because you were not here when we started. We got your apologies. Well, thanks for attending.
Thank you, Chair.
Thank you, Chair.
You're welcome. There we are. comments, questions from members on the last 4 presentations? If we are okay, we can say so. Then adjourn. Let me see, Honorable. I see Honorable Scott. Honorable Van Rooyen, are you raising your hand?
My hand is up, Chair. Flown raised it.
Okay. Yeah, there are 2 hands so far. Honorable Van Rooyen, over to you.
Just a quick one on the DBSA. We have seen countries, making a U-turn on investment on the IPPs because of sustainability and the risk factors. I'm not sure in the DBSA funding model, how do they take care of such concerns if really such concerns have been picked up by DBSA? Thank you, Chair.
Thanks, Honorable Van Rooyen. Honorable Squad.
Thanks, Chair. Chair, I'll start with the last, the FIC, just in case they have connectivity problems. In terms of the work that is being done, Chair, with the Financial Intelligence Center, we recognize the cybersecurity, which is a growing global threat as digitization increases. And I would like to understand to what extent are the cybersecurity threats contributing to the flow of proceeds that are unlawful or illicit. Certainly, there are or should be high levels of illicit financial flows in the continent, but also in our country in particular. I would like to understand which are those sectors that are more prone to illicit financial flows and money laundering, and what are the measures that are really required to tackle the illicit financial flows in a time of multiple financial service innovations, such as the crypto assets, which hides the identity of the users. I know that Mr. Smith had already alluded to the fact that you've got the legal persons, but also other, trusts or any other legal entity that can actually hide the actual identity. But I would want to understand the level of which the illicit financial flows are happening. But also previously we have asked about, the mandate of the Financial Intelligence Center, that because they say they can't take any action, even if they see that there is. Just want to understand is whether there are no reforms that are made in terms of their regulatory framework. The other issue, Chair, is to what extent are the other global jurisdictions sharing information with the Financial Intelligence Center on money laundering, terrorist financing, and proliferation of financing in the country, and what are the actual measures that are required for that global cooperation to actually, become more effective? In terms of the artificial intelligence, Chair, to what extent is FIC using artificial intelligence to enhance its capabilities to identify, but also to respond to money laundering, your terrorist financing, and other illicit financial flows? I think for FIC to be the last one, that in relation to the South Africa's compliance with the Financial Action Task Force, what are the measures that FIC is implementing towards the next mutual evaluation to enhance the integrity of South Africa's financial systems and other measures that are so required by applicable public entities? With just one recommendation, Chair, that if the FIC is possible to table a report to the Finance Standing Committee on illicit financial flows, which would include money laundering, terrorist financing, and proliferation of other, activities. And the Financial Intelligence Center to increase its AI capabilities to identify and respond to money laundering and those other unwanted or activities. The second one, Chair, would be the FSCA. Just to move from the basis that the South African financial sector is one of the most concentrated sectors, and regulations have a critical role to play to promote competition, which result in affordable and quality financial products for consumers. Is the Financial Sector Conduct Authority of the position that our current regulatory framework enhances competition, or other measures are still required to significantly increase competition and tackle concentration in the sector? If there is any, I think the FSCA can share with us and Tate Kamlana. There are many financial service providers that are also interrelated in the product offering, having partnerships across retail, telecommunications, and financial services. Does this collaboration enhance or inhibit competition as major companies share data across industries due to connected product offering through reward system and innovative ways? I'm asking this because if it doesn't really offer competition, then it would actually create a problem for those that are actually the consumers of the services of those service providers. Just to get the last one, if not two, Chair. Just to understand the regulatory gaps that the FSCA has identified in relation to crypto assets and the participation of various industrial sector companies in the financial services. And welcoming the existence of a sandbox to harness financial technology innovation, how many Black-owned companies are part of this sandbox? And what are the measures that the FSCA has taken to ensure major financial services companies don't stifle innovation and competition due to their participation in the sandbox? And what is the last one? What is the position of FSCA on the use of other alternative financial information of consumers to enhance credit assessment and financial inclusion by financial service providers of different forms, so that there is fairness, but also equity in terms of provision of services? And I would also further recommend the FSCA to present proposals for the implementation of the open finance in the country to increase competition in the financial sector. And yeah, I think that would be the last one for FSCA. Oh no, also to present report on the sandbox since its establishment. The last one, Chair, would be towards DBSA. And part of the DBSA, Chair, is the Pension Fund Act Regulation 28 include provision for asset exposure of pension funds on infrastructure at 45%, but the National Treasury has reported a low asset allocation by asset managers. And what are the constraining factors impending on the significant assets allocation for the infrastructure? Chair, with the current funding model of local government municipalities generating a significant revenue through electricity revenue, the implementation of IPPs and off-grid powering will impact local government revenue. Is the DBSA in a position to support public investment in energy by local municipalities to generate electricity and accurate profits and accrue profits to mitigate the revenue low risk like we have in the Western Cape, where several municipalities are actually looking at generating that electricity for the market? And what are the effects of the country's risk premium on DBSA, and what's the strategy does DBSA implement to crowd in low-cost capital for infrastructure development? The other, Chair, is the share of Black-owned entities which have been supported by the climate and environment facilities from a DBSA in the country. If there is any, I think it would be great to know that. What are the measures that are required to close the finance gap of infrastructure, and which avenues has the state not tapped into to increase investment in infrastructure in terms of the thinking from a DBSA or assessment that they might have made, if any? I think it would be great if they were to share with us. The issue of allocations for various projects. Chair, what is the level of allocations, equitable allocations to various provinces in terms of the services that are provided by DBSA? In terms of making sure that they can also play a role in stimulating, infrastructure development within the various provinces. And does DBSA have a role in responding to infrastructure planning and financing weaknesses in local municipalities? Just looking at what is happening presently, look at the level of spending in terms of infrastructure, but also you look at particularly infrastructure maintenance within municipalities. Is there any role that DBSA would be playing or is actually playing to assist? Because in terms of the report, there seems to be a lot of role that, or a bigger role that the DBSA has been playing in local municipalities. But we have seen a huge, gap in terms of, particularly in terms of infrastructure development and maintenance within municipalities. And I think there should be a role that the DBSA could actually be playing in that regard. but also looking at a possibility. This one, it's more of a recommendation, Chair, whether could the DBSA increase a focus on creating partnerships with pension fund asset managers so that they can be allocated assets for infrastructure development and increase the development of infrastructure projects or expansion of infrastructure projects, which can attract increased private investment, considering our balance sheet and deepen the financial market. And the pension fund adjudicator, Chair, I think we have dealt previously with the issue of pension fund adjudicators, particularly in terms of those that are municipalities and entities and security companies that are not compliant in terms of their contribution, and also with municipalities. It would be great, Chair, if we were to get a list of those municipalities that are not necessarily complying in terms of their contribution, because they are creating a huge risk for the livelihood of those families. And if not tackled, another municipalities are non-compliant and nothing is actually happening, it can actually continue to become a bigger risk, where other municipalities also take that route as the easiest route, because then there's nothing happens even if there is no compliance. So I would like the pension fund adjudicator to at least share with us, the identity of those municipalities, but also look at the action that has been taken by pension fund adjudicator in terms of those security companies that seem to be the highest in terms of non-compliance in terms of their contributions. I think, Chair, those would be my contributions. Thank you.
Thank you, Honorable Scott. Honorable Molefe.
Thank you, Chair. I just have a question for the DBSA. I noticed that your ROE is 8%. Well, 6% and growing to 8%. So my question is, what's your weighted average cost of capital? And your IRR, what is the internal rate of return that you require on projects in which you invest? And then my other question relates to IPPs. Do IPPs rely on government guarantees? When you invest in IPPs, is a government guarantee a necessity to make the project viable? Or does the absence of a guarantee increase the risk of an IPP project? Do you invest in IPP projects that do not have government guarantees? And what is the risk factor that you load in the absence of a government guarantee, and what does that do to the funding of the project? And what is the ROI on IPPs? On average, what is the return on investment on IPPs, and does that meet your IRR? Does that meet your IRR with government guarantee and without government guarantee? If you can give me a comparison of how the government guarantee affects the IRR. Thank you.
Thank you, Honorable Molefe. Let's get the entities and Treasury to respond. Over to you, PFA. If there are questions that you have to respond to, if not, you can so indicate.
Chair, thank you. In terms of the list of municipalities, we will certainly provide that. However, we'll do that in conjunction with the FSCA because they will have some other detailed data other than what we have from a complaints perspective. So we will work together with the FSCA to provide the committee with the list of municipalities with outstanding contributions. As far as the security companies are concerned, we have over the past 2 months worked together with the fund in order for the fund to streamline its process. Because from the adjudicator's office, we can only deal with the complaints that we receive. We have streamlined our process so that the fund can now lodge complaints on behalf of members of a particular employer. Instead of the members lodging one by one, the fund will now do what it was supposed to do in the first place and clean up its data and then lodge the complaints on behalf of the employees of a particular employer all at once. So that is as far as we have taken the issue. Thank you, Chair.
Thank you. FIC.
Thank you, Mr. Chair. I'll try to cover all the questions as best I can. Firstly, on the issue of cybersecurity and illicit financial flows, we see the major source of proceeds of crime that flow into illicit financial flows coming from fraud and to a large extent corruption. And then that is followed more distantly by the types of crime associated with organized crime, such as wildlife trafficking, narcotics trafficking, human trafficking, and so on. We see the use of cyber techniques or breaches of cybersecurity mostly in the context of fraud. And that's a tool that seemed to be a preferred way for people to commit fraud. Some of the things we had to do to counter that is to improve our own skills, our own tools. We've, for instance, developed internal capacity to deal with tracking traces of financial flows where crypto assets are involved. And we are able to share that skill and capability with our law enforcement agencies as well. And that goes hand in hand with the tracking of flows of funds where cyber fraud was involved in the generation of those funds. As far as the reforms, regulatory reforms are concerned, there was a major package of regulatory reform late in 2022 that included some of the reforms, amendments to the FIC Act, specifically to expand the mandate of the FIC to produce forensic evidence, which we didn't have before. Also to deal with some of the compliance requirements for financial institutions that were clarified to some extent, not necessarily expanded. New provisions in other legislation, not in the relating to specifically to the FSCA, that was introduced in terms of beneficial ownership requirements for companies and trusts, where in the Department of Justice and the Department of Trade and Industry and Competition, we've created registries for this information in the CIPC and in the Master's Office. And there were improvements made in the legislation relating to non-profit organizations, again, outside of the FIC Act. But all that was part of one package of regulatory reform that followed the previous FATF mutual evaluation. Global sharing of information, that is an ongoing challenge. We find that certain jurisdictions are much more cooperative to share information, especially around our region, our neighboring countries and up into East Africa. And obviously there are some jurisdictions where it's more difficult to receive information. And we, as the FIC, have a long list of memoranda of understanding with institutions such as ourselves in countries around the world. that facilitate the sharing of information. We are also a member of a network of similar organizations called the Egmont Group, where that provides a secure communication mechanism for us to share information. So generally, we receive very good cooperation. We, as the FIC, pride ourselves on the fact that we provide good sharing of information and support to our counterparts. Where we've encountered problems, there are mechanisms where international pressure can be applied. For instance, we would make use of the opportunity if we know that another jurisdiction where we encounter problems are undergoing a mutual evaluation. We would advise the teams that are carrying out those evaluations of our lack of cooperation in our experience, and they would take that into account in the evaluation processes. And the use of artificial intelligence, that is most certainly part of our development roadmap. We've now engaged for the past year in a prototyping process where we are looking at different artificial intelligence models. We have identified a few mechanisms in which we can very constructively use artificial intelligence. The FIC processes a large amount of information, and it's not possible to deal with that information, process it with the necessary speed that we have to if we do not make use of artificial intelligence. So we are certainly improving our skills and our tools as well to make the use of artificial intelligence business as usual for the FIC within the coming year to 3 years. The development process that we're following there is one of crawl, walk, run. That's the sort of the project terminology that's being used. And we are now just getting out of the crawl stage, finishing with the prototyping and starting the development process for our preferred models. And lastly, the FATF, the next evaluation and the contributions from the FIC to that. Our main contribution is the change that we've made to establish our supervision capability on a risk-based process to kind of build the capability within the FIC to do the risk assessment of our sectors that we have to supervise and to plan our strategy for supervision according to the risk-based supervision model. And alongside with that, our capability to produce forensic evidence. We believe that will be a major contribution to the success factor for criminal investigations and asset forfeiture proceedings with an enriched evidence base that our counterpart authorities, our partners in the law enforcement system can work with. And those have been direct developments within the FIC to better position us for the results that we would have to show in the next mutual evaluation. Other areas where we support the effort is for our counterpart, our partner organizations and other departments in the NPO sector to support developments in the oversight and regulation of certain types of non-profit organizations, and especially in the beneficial ownership environment to support the rollout of the beneficial ownership registries in the CIPC and in the Master's Office. So that's a very short nutshell answer to the questions. I hope I've covered those well, but if not, we would be happy to expand. Thank you, Honourable Chair.
Thank you. FSCA. FSCA, are you there? Okay. DBSA. We'll come back to FSCA.
Thank you, Chair. I'll start off with the response on the funding model for the bank. As I had presented earlier on, is what we do is we source funds from the capital markets and we on lend. In terms of sources of funds, we source our funds from our debt program on the JSE, so through bonds. We source funds from bilateral arrangements with other multilateral development finance institutions as well. And thirdly, we source concessional funds. So those are funds that are given at a much lower rate. So what we then do is we then put all of these funds into a pool of funds that then equates to our weighted cost of debt. And what we do is, because we also have a level of high equity within the bank, when one looks at our cost of debt and our levels of equity, we then get to weighted average cost of capital. And the weighted average cost of capital that we currently have, we categorize between the rand, the dollar, and the euro. Because we are operating in the rest of the continent, we source funds in dollars and in euros as well. And the weighted average cost of debt comes out to below what the ROE target is, that is stipulated. And this is answering the question that was asked by Mr. Brian Molefe, and the funding model that was asked by Honorable Van Rooyen and Honorable Molefe. Now, when we fund, we then fund either using, because there's different stages, where we provide technical support. This is funding, for instance, if we had to support a municipality with an infrastructure plan. That funding we fund out of our own profits. So that is the technical support that we provide. Secondly, we also then fund project preparation. So project preparation is funding all technical assessments, environmental assessments, development of funding models. Any cost that then gets a project to bankability. Now, if I then look at getting the projects to bankability in terms of the funding element, that's when we provide equity. We can provide an equity instrument. We can provide a debt instrument. We can also provide mezzanine. And so the way we then support municipalities, which then comes to the question that was asked around how we then support municipalities. With municipalities, what we then offer, and this is based on our risk parameters as well, we then provide a subsidized interest rate to actually, enable funding to municipalities. We also have a facility that is available for front loading. We provide front loading because we do understand that when it comes to municipalities, they're under-resourced, they have 3-year plans. And what you find is within the MIC, they do not have adequate capital up front. We then also provide that sort of support so that we can, so that they can implement their projects earlier. When it comes to the IPPs, I mean, one of the things we invest in renewable energy is, if one looks at it's mainly driven by the integrated resource plan of our country in strengthening energy security. And within the plan, it allows for different forms of energy sources and technologies as well. So when one then looks at what is currently happening globally, when one looks at the renewable energy, whether you're talking solar, whether you're talking wind, with gas now being identified as a transition fuel as well, all of those elements are critical in, all of those sources are critical in strengthening energy for any country, for that matter. So as an institution, these are the transactions that we support, and we source funds globally to support these transactions. And with any, with any transaction that we support, we are driving access. We are also driving, affordability as well. So that is the reason that we do remain supporting various sources of energy, because all sources are required to strengthen energy security and ensuring that there is access and there's also affordability. Now, when it comes to pension funds, for instance, I had mentioned earlier that we have a DMTN program with the Johannesburg Stock Exchange, and that is where, for instance, asset managers then buy our bonds and actually provide finance to DBSA for DBSA to then support infrastructure projects across the country. So that is the one mechanisms. We also enter into private placements or even bilaterals with the asset managers to support our infrastructure projects. So that is where there is the opportunity for infrastructure. However, I just want to mention that one of the programs that we had designed in the form of the infrastructure fund, it is designed to also crowd in pension funds to support infrastructure. And because we are adopting a programmatic approach to infrastructure development, even with the with the infrastructure programs that we are developing, we are going to be ensuring that there is pension fund participation in there. So our role is to make sure that we develop investment programs, we prepare projects as an institution so that there can be participation from the pension funds. And this also answers the question on what mechanisms are we using to close the infrastructure gap. And I've already touched on the necessity for us as an institution to expand our investment programs, to also catalyze infrastructure projects, because what you then find is that when we design the programs or when we invest in the projects, once as a DFI we are supporting the project, we de-risk the projects, then we can enable private sector participation in those various projects. Now, when it comes to equitable allocation across provinces, I don't think that is something. I think you have seen in the presentation that it actually differs members, and that's mainly driven by pipeline. And what we are embarking on now as an institution is to even start engaging at the province level to then start seeing what are the infrastructure programs that we can start supporting at the province level as well. So this is when it comes to closing the infrastructure gap, it is a journey, and we definitely embarking on the investment programs and engaging all players. The other thing that I'd like to mention is the issue around guarantees, and that is a product that we also looking at developing, so that we can also enable enable pension funds to participate in the various infrastructure projects that we undertake. On the municipal maintenance, a program that we have developed around infrastructure maintenance is called the Asset Care Program, and that is a program that we fund out of our resources that we designed together with the municipalities on the infrastructure maintenance program. So that is already at existence. It's just a matter of scaling, and that also depends on availability of funds to then do that. So partnerships with the pension funds, that is something that that is there, and that is that we will continue to strengthen going forward. I think I have answered most of the okay. The one that I want to mention is around what we do for every we have a model, we have a pricing model, and in terms of our pricing model, we have a risk-adjusted return on capital that we target for various transactions. And in terms of that RAROC that we set, all transactions that we undertake as an institution to ensure financial sustainability must be higher than that level that we set. We do have, we have set that target to ensure that we remain financially sustainable as an institution. You will see that even in terms of our net interest margin is currently above, I think it's above 6%, it's about 7% or so. And what influences that is not only, it's looking at the endowment impact of the level of our equity, and also the wasted and also our cost of debt. I mean, if you look at currently when you look at the balance sheet of the DBSA, we actually sit at very high equity levels, and that benefits comes through when we price transactions. On the answer on the IPP in terms of government guarantee, I think that's how the program was designed in 2010, 2011, because they were backed by government guarantees. I think I've touched on all of those aspects, and maybe if one looks at the weighted average capital, it does range depending on the currency, and that range is also managed as part of our risk framework. I know that Mr. Brian is asking what is the actual weighted average cost of capital. If I look at the weighted average cost of capital, it does range, depending on when we measure and the funds that we then have. We're looking at a range between probably 5% and 7%. I think, have I touched on all of them?
Yeah, thanks very much, Tina.
Okay, thank you.
If ever members want to make follow-up, they also indicate. Thanks. FSCA?
Thank you very much, Chair. I'll just start on these questions around how we ensure competition. So quite clearly, the market entry requirements that we administer are the primary tool that we use to license entities and to create the opportunity that there will be greater contestability in the space, whether it is with new financial services or the existing ones. Additional players do then promote competition. So that's one. But we have done something much more well-to-do over the period of time amongst ourselves as regulators, this IFWG, where we had said there are good ideas. They might not really fit well in terms of the existing regulatory frameworks. Let's see what those are, and let's see if we can tailor make a regulatory framework or apply it in a way that makes sense for that business, so that these businesses thrive and can be able to succeed and therefore employ people and make money and so on. And that's been the work of the IFWG in this innovation hub space. And we can share the sort of names and business models from the People's Fund, which was an investment, sort of crowdfunding investment. There was a Santam, there was an index insurance initiative, there was a cross-border payments reporting initiative, a custodial services for crypto, which is quite important, and another crypto asset payments, and a crypto border crypto asset payment, and a cross-border crypto payment. So in this area, these are the areas where we've been trying to accommodate innovation and understand from a regulatory perspective what it is that we need to do. Obviously, need to be crystal in terms of what risks we are wanting to be managed. But it is quite a commendable approach by regulators to support innovation and competition in this way. So that's what I wanted to just indicate. We spend a bit of time and resources on it, but we do so together with others, the SAB, the Prudential Authority, the Competition Commission, the NCR, and so on, because this area is quite important to take forward. So I thought it was important for the members to include that in your report as well. Thank you very much, Chair.
Thanks, FSCI. Those are the responses from stakeholders. I believe we are done for today, because tomorrow we are proceeding with the other entities to report on their APPs and their strat plans. Do we have announcements, Secretariat?
No announcements, Chair. Just that Tebogo will send out the link and documentation for tomorrow's meeting. Thank you.
Okay. Deputy Minister Sarupen, do you have anything to say, or you'll still be there tomorrow?
Chair, I will be joining you tomorrow. So I will see the committee again tomorrow with the remainder of the entities. Thank you very much.
You're welcome, DM Sarupen. Yes. Did we indicate that the minister apologized because he was not well? I hope he might join from the look of things as I spoke to him. Yeah.
Yes, Chair, I did indicate his apology at the start. He is very ill at the moment.
Okay, no, thanks. Thanks, honorable members, support team, and all the colleagues from the entities that report to National Treasury. Thanks for the presentations. We are going to hold you accountable on a quarterly basis in regard to what you have presented today. So from time to time, we'll be meeting you to see to it that you implement those APPs and strat plans. It's quite very important now that also you spend all the money that Parliament is going to appropriate to you, create jobs for young people, and make sure that the MTDP gets implemented. We have got serious challenges of unemployment, poverty, and inequality. So you are coming here for us as members of Parliament to make sure that the programs that you have tabled here respond to the challenges of unemployment, poverty, and inequality. So for you to have come here, it was not just for us to tick the box that you have complied, but it's to make sure that we deal with issues of economic growth, create jobs for young people, and the growth, and that is inclusive. That's quite very, very important. DBSA will be following up with you as the DDG has indicated. We'll be meeting Treasury to get a presentation on the concept of PPPs. We don't want to take it for granted that we understand that concept. We know that you are quite involved in the rollout of infrastructure in the continent and here at home in particular. So we'd like to know as to where do you fit in that concept of PPPs, or what is it called also? Is it also BFIs, something like that? So I think by the time Treasury comes here, they will have also brought you on board in that regard, because you have been in the field for quite some times. So thanks very much, all the stakeholders and colleagues. The meeting is adjourned until we meet again tomorrow, Wednesday, same time, 9 o'clock, same platform, that's a virtual platform. Thanks. Meeting is adjourned.
Thanks, Chair.
Recording stopped.
Thank you.